welcome to the show. It is the Spooktober show, Halloween. Ben, if you're watching, look, I'm already in the mood.
I didn't even notice that this morning. Good morning, everybody. It is the last day of the month. That's the important thing, of course, because we always get some funny moves on the last day of the month, don't we, Ange?
We do. It's also the day when we've had crazy tech news out. Crazy. Before we get to that, how was your evening? Because I was absolutely shattered after watching the budget.
That was, I must say, that was my most fun on a trading floor in about 12 years. You should have said the whole floor was all glued on the television. Looked like the television hadn't been used for about 5 years. Poor Axel was trying to work out how to get the volume up for the budget, and then so we had to go searching for a remote control. But the whole floor was buzzing. The biggest cheer was, of course, in the 1 pence off a pint.
Everyone's like, whoa!
But yeah, just a really, really good feel. But will it be a really good feel in UK gilts this morning? Because that was the one where we really saw the action. The FTSE 250 tried to rally. The FTSE 100 tried not to go down too much. GBP poked its nose above 130 and got hit back down.
It was really meh at the beginning, wasn't it? Cable was just kind of like doing nothing for a bit, and then after about 10 minutes or 15 minutes in it moved. But I put quite a few trades on, and I think we had a brief moment when she started talking about, you know, schools and stuff, and then Luke came over and you kind of like for a bit before we started trading again. Axel was still madly typing away. If you want to see those images, I've posted them on my Twitter page, but it is actually quite amazing. I mean, the mood was incredible. The buzz.
It was fantastic. Apart from the poor lady behind us was worried that the only incentive for her boyfriend to propose to her may have been taken away with the dual allowance on the tax thresholds. So there might have been tears.
Aww. I was really shocked that Rachel Reeves didn't touch fuel duty.
Yeah, it was a win for motorists. Yeah. It was a win for those on minimum wage. It was a win for a very high number of the population, if you don't count the fiscal drag. You know, that's something my girlfriend in particular, as an economist, gets very irate about, and yeah, came home ranting.
Win overall for house builders as well. If you, like us, I was trading Taylor Wimpey. However, I didn't come out quickly enough, so I didn't make as good profit as I could have if I was doing that. But I was also trading BAE Systems. So the reason for that is because BAE Systems is the biggest supplier to the MOD. And they cover everything from air to ground to sea. And so they got a lift when Double R was talking about how there was going to be increased spend in the military. And also the fact that we have been underspending for the last decade or so. But what's also really interesting was the fact that she didn't say much about gambling. At all, right?
Yeah, the gambling stocks really were the big performers, up 6%. Rank, Entain, Flutter, they were on the high up there on the leaderboard for the session. But yeah, things just tailed away a little bit because of that move in gilt. So that's the one we're going to be watching this morning. If I show you a chart intraday of how we went through the budget, then you can see the big move there. So we did actually try to rally, first of all. Here, this was the rally into 1 p.m. And then I think we had a gilt auction somewhere around here, and you can see the turnaround from 96.50 down to 94.40 at the lows. That is a huge move in gilts. No, I mean, nothing like the, Liz Truss. We're not saying that. Just concerns around will the Labour Party manage to place all that new extra debt So yeah, higher yields, potentially the OBR says higher mortgage rates.
Now, also, we saw a similar move in the longer end as well, didn't we? I mean, it was across the board. And did you see the buzz surrounding how yesterday's budget means potentially there is not going to be another interest rate cut? Did you see those stories that were swirling around that perhaps there might not be another cut?
Oh no, I think Bailey's been very clear that there's going to be a cut.
You think so?
I think. Oh yeah.
Yeah. I just think that inflation is not completely, you know, gone yet. I think it might come back and bite us in the bum.
Now we've got a lot to get through. We've got a lot of numbers in Europe this morning. That's just a quick look at the probabilities in the US, but still, you know, nailed on for a 25 basis point cut over in the US on that September 11th, just after the election. But let's take a look, because there's so much to get through on the European Open. We'll have a look at overnight action. And where do we even start?
I know. It's so much out there. Should we start with the techs first?
Well, yeah, let's take a look at the futures, because you're seeing the NASDAQ down nearly 1%, right? S&P 500 down 70 basis points, back below that 5,800 level. Key 5,800 level, it's really been fighting with. And tech about to hit the 20,200. So that gives you a real good clue as to what we saw in the overnight tech world. So yeah, what was the number one tech name that you jumped out to you there?
For me, it was Meta. I mean, they missed on user growth. They also warned on AI spending. As I said, the key thing that I am looking out for is this AI spending. And we are in a time where, you know, we've talked about AI for a long time. Companies have pumped billions, right, into the hope that this is going to spur growth and generate revenue for decades to come. But we haven't actually seen exactly how materially this will translate into services that consumers will want to pay premiums for. You know, it's all great and wonderful, you know, when Rich does his search this for me, right? But that will only take them that far. Well, I want to see real concrete evidence of how it's being, you know, sold to pharmaceuticals, how the uptake is going to be concrete and less, what's the word, experimental, if you like. And so Meta missing on this and the warning, you know, it makes me really, really worried. I mean, I think that these numbers are, to me, a red flag. There you go.
On what in particular? Red flag for
the AI, and
because they're spending so much on AI.
Yeah. And you can't continue to keep pumping that amount of money, right?
Yeah.
If you can't show a steady revenue, growing revenue stream. And I
think that's the story across the board, is that Microsoft also putting huge amounts of spending over the next few years, but what kind of return are they getting for that? So both stocks down 3% after hours. Microsoft, we saw, let's take a look at that intraday move there. It was really on the conference call. You saw the initial move at 8 p.m. when the numbers came out, and then it was on that call that you got the real move down there at 10 p.m. So yeah, Microsoft down 3. Let's take a look how that is wider. You can see great performance there, of course, throughout the years. Then, so Microsoft, Meta down 3%, and you've also got Amazon and Apple tonight, which we'll take a look at with Ronnie coming up at just after 8 a.m. Ronnie's going to come and talk about the previews of the big stock tonight. What about European numbers, Ans? Which ones have raised an eyebrow there?
Stellantis, I think that's just coming out right now as we speak, or at least I just saw a headline on that coming out. Stellantis posting 27% drop in revenues. Also taking a look at Shell, third quarter 2024, the results I think are coming out. They're also talking about a share buyback program of $3.5 billion. Also checking out Siemens buying Altair Engineering, $113 a share. Also because we're so close to Apple's results. And like I said, trader friends, look out for what they say about Apple 16. You know, anything that says, if they say, you know, deliveries and demand has been strong or weak, those are trading signals. And also Coinbase, I mean, Bitcoin, anything related to Coinbase and Bitcoin. Coinbase shares dropping post-market after the earnings miss. What are you looking at?
Right, so we've got Shell looking up 1%, so that's on that third quarter adjusted profit, beating estimates, so 6 billion against 5.4, so they're looking up 1%. Stellantis looking down 2%. That is the pre-market there. We've got Carlsberg numbers, so third quarter organic revenue up 1.3%. The estimate was 5.5, so still seeing full year organic operating profit up 4 to 6. Carlsberg looking down 1% pre-market. Now, what about those French banks?
I am looking at something French, but not the French banks actually. I'm looking at Total Energies. And just checking out the chart here, because Total Energies was also out with some news. Oh, you're pinging, Rich. Have you hit the limit?
No, we got some hot off the press news.
Oh, Total Energies, tell us in a second, but Total Energies third quarter adjusted net came in at just over $4 billion. That was slightly under expectations. So just checking out the 10-minute chart for Total ahead of time and also the daily. But pretty much what I'm looking to trade today will be some of that tech enthusiasm into Apple, and also potentially looking at some of the budget headlines that I might have missed yesterday.
Well, right, okay, ING actually might be the bank of the morning. So they're boosting their full year total income forecast and announcing a 2 billion share back. A lot of share buybacks getting announced this morning. I've already seen a total of double-digit billions. But yeah, ING looking up 1% estimated pre-market there. But the real winner looks to be SocGen. So SocGen up 3% pre-market with a third quarter net income of 1.37 billion. Estimates were 1.27. And that deputy CEO is to step down in a management reshuffle. So their counterpart, BNP third quarter net income of 2.87. That's in line. Small miss there on a revenue number of 11.9. They're looking down 1%. So SocGen looking up 3% pre-market, BNP down 1, and ING up 1.
SocGen's chart is really interesting. If you look at SocGen's chart all the way back to the beginning of 2023, you see quite a peculiar pattern there. But what I like about this pattern is it is, you know, quite consistent, gives you very good levels to trade, and also it gives you a really good sense of where the bag holders are. And you can tell that there's a clear, to use that term, bag holders? Yeah. So at around, 2,400, that's a clear sort of area where the bag holders might be. But also, we've got a good, that's also a resistance at the moment. And if we see this punch above that, then there could be further upside. But if we continue to bounce below that, then further downside to come.
Right, gold, all-time highs. Angie calling it once again, still long her gold, 2,785. Now, when I lived down in South Africa trading out of Johannesburg, one of the main problems we had that was you wanted to be invested in gold, so you tried to buy the gold miners, never worked. Is the same going to be true of crypto? You can be long Bitcoin trying to get to new highs here, but if you are a shareholder in MicroStrategy or Coinbase, then you're not going to be happy today because those stocks were down after market last night. So MicroStrategy talking about raising another $42 billion over the next 5 years to buy Bitcoin. So he is going all in at MicroStrategy there. So that stock down after market. And also we had Robinhood. It looked like a bit of a miss there. And then Coinbase was a miss on both lines. So that'll be an interesting one because we've got the all sessions at 8 o'clock, don't we?
We do. What I don't like about MicroStrategy and Bitcoin is there are some days when Bitcoin is surging and MicroStrategy, for no apparent reason, is down.
And that's it. That was exactly what used to happen with the gold and gold miners, was that you just had that underperformance. Now, MicroStrategy's had a great year so far, but is he going too far? Talking about raising another $42 billion. You know, if you're a shareholder in that, you've really got to be a believer. Yeah.
But other than that, I mean, gold, yeah, you're right. I think miners, I would put it in a longer term play because they don't tend to go in tandem, right?
Well, that's it's a continual underperformance over the years. If you look at the likes of gold fields down in South Africa, just horrific. Destruction of value.
And of course, gold producers as well, like Rich rightly said, there are so many other issues, right? So you could have like strikes, you could have mines that have issues, or they suddenly get closed down for whatever reason, or there's a contamination problem. So there's a whole host of things that can also hit gold miners. So that's why for shorter term, medium term trades, I prefer gold as in spot gold itself. And currently we are just looking at this. Are you still short gold?
No, that was like an $8 play 3 days ago.
All those of you looking at gold, we're at 2783. I think Rich, because he's got an excellent memory for numbers. I've got really good memory for words, no memory for numbers whatsoever. But he's got an excellent memory for numbers. So he can probably remember what number I keep messaging him almost 3 consecutive days now for gold. I'm waiting for it to punch above.
85?
Yeah, 27. There you go. 2785 to get to the 2,800 mark. At the moment, up money there. So still looking out for that before I close. Right.
InBev, AB InBev, not great numbers there. Looks like a drop in volume that was bigger than expected, but another one that's got this $2 billion buyback. So they are looking down 1% pre-market, narrowing their full year organic adjusted EBITDA forecast. Yeah, so Carlsberg, both Carlsberg and AB InBev, not great this morning. Carlsberg, yeah, down 1. AB InBev also looking down 1. So a lot of European numbers. Now, what about in our hometown, our homeland of the UK here?
So looking at quite a few things, but before we get to the UK, we also have quite a load of. Did you notice that Rachel Reeves' AIM shares gambit?
They were the ones to really celebrate her budget, weren't they?
Yeah, but the thing is, I was talking to quite a few people and fund managers after that, and they were saying that it's all well and good getting people to buy into AIM shares, but what happens if it, there's high risk involved, it's less liquid, right? And if they get whacked, maybe they won't ever go, into those stocks ever again. It's quite a gambit there. But I have to say, it piqued my interest. If you've never traded or you don't normally trade those shares, you're now kind of like, oh, well, I'm gonna, right? I don't know whether I did that for you, but I was interested in it. So across the UK, we're looking at quite a few things. I think there might be a bit more shakeout for house builders as well, but I'm just looking at some of the things that might move. As you said, gilts, one of them, the UK Debt Management Office has also revised up its gilt issuance plans for this financial year by £20 billion to 290, just short of 297 billion.
Right, Hallion, have you still got your Hallion? If you were a GSK holder in the UK, of course, that consumer business sold off. We had reports from them this morning reporting a marginal fall in its third quarter revenues on Thursday, hurt by declines in its pain relief and digestive health segments. So that's certainly something that producer Fred and I have needed over the past few weeks. A bit of pain relief from the colds and the throat infections, and my goodness.
Well, you have been, yes, you have been.
Lemsipped up to the max.
You like the yellow one too. Ooh. Blackcurrant is the way to go, trader friends. And some of the key things that I feel that we have missed because we're 10 minutes for the open. Can I share those images from Valencia?
Oh my goodness, it's horrific.
You know, for those of you that miss what's been happening in Valencia, and prior to this, if you were watching Axel Rudolph talk about, you know, when he was in Menorca, they had been whacked by
of course, that was an early, yeah.
Yes, and I spoke to Axel yesterday. He says he thinks that it could be a related storm, but I don't know whether you can see either Richard's video at the top of that page or even my video. I mean, it's a national emergency. We are talking about the deadliest. They're now calling this the deadliest flood.
It's just awful. I mean, I lived in Valencia in 2018 for a month, and stunning place, like incredible culture, the food, all incredible. And I lived on a street like this, so to see this is just completely.
It's bananas.
Yeah, you can't marry the two together.
I mean, they're trains stuck. We've got friends in Valencia that now cannot fly out. They had to abandon their taxi en route to the airport. And last time I looked at the count, I think about 90 people are dead so far.
Oh my goodness.
But you know, there are emergency services all across. They had crazy floods, and you're right. I mean, when I was in Menorca, not a single drop of rain. Mm-hmm.
Right, so we take a quick look at the front page of the Times. Of course, there are the Spain Valencia stories included there. Also, a lot on the budgets, of course. So if we want to just pop that up, give you a look at the front page of the press today. You've got a useful tax calculator there for what does it mean for you and your pockets, and then. Also, what's this? First UK case of new Mpox strain detected.
But wasn't it like just in one person or one bee or something?
Well, yeah, let's certainly hope so. Right, after the break, we're going to have the market open, and then Ronnie's going to be joining us from the trading floor, telling us all these numbers and all sessions moves from last night. What are we seeing this morning? We'll see you after this break.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into 3 key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Hey, welcome to the show, and we are counting down to the open with Ronnie Agnick here, live from the IG trading floor. Hey, Ronnie, welcome to the show.
Hello, both of you. Thank you very much for having me again.
I love having you on.
It wasn't my choice, Ronnie. I wanted Ginger.
I thought we were Scottish mates, Rich.
Aren't you Swedish?
Well, I went to uni in Scotland, so you know we have that sort of connection there, but clearly not.
It's all Vikings in Scotland anyway.
Ronnie, what's shaking things up for clients early in the session?
Yeah, there's been a lot of reports and earnings. It's earnings season, as we all know. Shell has beat strongly, and you know, as I've said every time I've been on the show, I'm drill baby drill, long in oil.
You're
even
not
though the
rooting for
oil
Trump, are
price-
you?
No comment.
Right. Now, are we ready, Ronnie? Are you ready for this opening bell? It's coming. We've only got 10 seconds till the kickoff. Here we go. Let's go to opening bell. So we're off and running. What ones are you wanting to watch this morning, Ronnie? What shall we get up on the screen for you?
Let's start with Shell. Let's get Shell
Yeah,
up on
I
the
got
screen
Shell
to begin
up
with.
on tick at the moment. If you want to take my chart, here's the 1 second. Let me get rid of that. Currently, not a huge amount going on. Ooh.
ABI InBev down 2.7%. So that's the mover on there. Weaker than expected volumes. Oh dear.
Shell is now off, and we are seeing a early rise of around 1%. I might have a bit of that there.
Yeah, I mean, they outperformed the expectations, the adjusted profits. They had strong 6 billion adjusted profits, strong cash flow, and they reduced their debt as well. So they created a neat, balanced balance sheet. The new CEO, or not so new anymore, but he's focused more on disciplined investing, and they've moved a bit away from renewables, and they're focused on they've launched a new 3.5 billion buyback. They did have a loss of 162 millions from the renewables, but that was made up by the gas and the oil and the traditional assets. So I'm a big fan of the oil companies at the moment. So I'm
I hope
staying
that
strong
doesn't include
on bullish
Total
on Shell.
then, Ronnie, because Total down 2% on numbers this morning. But we're seeing some real moves. Look at this French market. BNP Paribas now down 5% on top of Total down 2%. So those numbers not being taken well at all. Anheuser-Busch InBev down 3.7%. That's taken Diageo down with it, down 1.6% in the UK.
Société Générale SocGen still suspended as we speak, so we could see some shakeout there still. For those of you that have just joined us, BNP Paribas meeting profit forecast thanks to the investment bank. But as Rich was saying earlier, the numbers don't seem to have impressed. Taking a look elsewhere on the losers board, we also have...
well, yeah, don't worry about that Whitbread. That's 36 pence ex-dividend. So that's the majority of that Whitbread move.
Yeah, and Reckitt is down 1.3%. Ooh, Scottish Mortgage Investment Trust down 1.3%. And Glaxo as well down 1.67%.
Now, Glaxo's suffering from a downgrade there, cut to neutral at Guggenheim. The other big movers on the upgrades, downgrades are Burberry raised to buy at HSBC and, Kering. There's just a story in the Times. The Tempest share tips is saying avoid Kering. Do not be buying Kering yet, says the Times.
Ronnie, what else are you looking at early this session?
Yes, I've looked a lot at the sort of pre-market, all sessions, American stocks, so we saw the big movers yesterday with Microsoft, Meta, and Coinbase. So I think Microsoft really showed that there is an unparalleled sort of expectations on them after the previous years that they've had. So the Azure grew by 33%, the cloud business. That wasn't enough. They still dropped 4%, despite beating on EPS and revenue and net income. So they still dropped about 4% in the early morning. So I think there's a potential for a buyback there, or a comeback, more to say. So I've looked at those sort of all session stocks quite a bit this morning, and I think eBay is one of them as well. They dropped over 21%, and that shows really, that gives maybe bit of an insight into how the markets will react to the Amazon earnings that are coming soon, how the entire retail sector are doing, because eBay has a foot in the tech sector and the retail sector, much like Amazon. So I'm watching those with a cautious eye.
So that's right. So eBay just down 8%. eBay down 8%. That's on the back of weak guidance and a warning there about the holiday season. So is that something that we got to take into consideration on Amazon tonight on the actual retail side of the business, do you think, Ronnie?
Yeah, I think so. I mean, there's Bank of America said they're expecting mixed results, so they're expecting strong results from the Amazon Web Services, which is, everyone sees that Google's done well with it. Microsoft is growing with it, not as much as people wanted, but so that's where the money is supposed to come from. But there is worry regarding this sort of slimming margins of the retail business, which at the end of the day is the core operations of Amazon. I wouldn't be surprised if we see, a beat in the AWS, but a miss on the retail figures. We can see some mixed results coming in from there.
Okay, let's take a look at these all sessions then. So Microsoft down 3.8, Meta down 3.6, Nvidia suffering in the fallout, down 1.5, down to the $137 mark. Robinhood down nearly 12, Ange.
Oh, yeah, it's really painful out there. It looks like it's more risk off, especially in the all sessions space at the moment. Ronnie, I know you like looking at the all sessions, and as do I, but just taking you back to the tech and retail that eBay is uniquely positioned in, does this also mean that U.S. retailers, it might herald weakness for the U.S. retailers that tend to report later on in the earnings season? So your Costco's, your Walmarts.
Yeah, I think I don't think the market is expecting too much from them, even though we've seen stronger U.S. consumer action, and the U.S. consumers has been moving strongly if you compare it with the European or the Chinese one. But I wouldn't have too high expectations of those. And with the sticky inflation that's coming, it's affecting people's wallet and their disposable income. So I would take a cautionary view to those as well. The retail sector in general, they're coming up to their best quarter, the holiday season. But as summer's coming along, we're reporting the past quarter. I'm not very, keen or bullish on the retail sector overall.
Okay, so Robinhood down 12%, now down, still about the same amount, but that's down to the Q3 results miss. Ronnie, what else in the European side of things are you watching?
So we saw that there's a lot of going on in this sort of luxury space market. We saw the carrying continues to drop. I've been quite bearish on that one for a while. It's interesting to see how the reflection works in the luxury market space. We have LVMH dropping, Kering dropped, but Hermes came through as a phoenix through the lightning, phoenix there. And it's funny enough, it's they're beating sales and they're posting good results. But if you think about the free float, it's so minimal. So it has massive market movement. So majority of the stocks are owned by the Hermes family, and then the majority of the free float is held by Arnault of LVMH. So it's a tiny fraction that's actually owned by the open market. So the effects and the movements are quite massive.
Right, guys. Now we are seeing further weakness in the FTSE, right down to the 8100 level. Ronnie, I want you to take you to the long gilt. So that gilt level is now just on the lowest level we saw yesterday at 3 p.m. Now that is causing the problems within the UK. So if we look at the losers in the UK, we see the likes of SSE down 90 basis points. The defensive names down because the yields on UK debt are going higher. Therefore, you're not getting as much as a benefit to be in those UK names for their dividends. So let's just be careful there. You don't want to see too much more weakness in the gilts, because that is the biggest indicator of how the market is taking Labour's spending plans over the next few years.
Yeah, we didn't exactly have a Liz Truss reaction.
Thank goodness we didn't.
Quasi-mini budget, but I think as you spoke, Rich, when you spoke with Luke, it's sort of like they've pushed the bad news out early. So when they delivered the budget, the actual budget, it wasn't as bad as people reacted. So if you looked at the sort of the cable market or any sort of GBP pair, currency pair leading up to the budget reveal, so around 11. It was red across the board, every GBP pair. But after the budget, it all bounced back. So it wasn't as bad as people expected.
I don't know. I think you might be calling that a little bit too early, Ronnie, because that's if we look at this gilt move, there's still concerns there. That is the lowest level we've seen now in a long time, and I would just want to see that stabilizing. I would not want to see that testing the 94 level today. Otherwise, I'd start to get a bit more worried.
Yeah, I think it's going to be interesting to follow the gilt as a representation of the UK market. I'm bearish. I'm bearish on the short term, but bullish on the long term for it.
An optimist.
Yes, forever an optimist. I can tell that, just the first time I met Ronnie, I knew he was an Hermes man. Not sure about Rich.
Yes.
Not sure about Rich, though. Just really quickly, Ronnie, what do you make of the mood music after the budget that perhaps it might decrease the chance of an interest rate cut here in the UK? I believe Sky covered it, Bloomberg mentioned it. What are your thoughts on that?
Yeah, it's a difficult one out of a macroeconomic perspective because one, they're increasing spending and borrowing, and then at the same time they're increasing rates at very high rates. So I don't think that there's going to be much room for a rate cut. I think BOE is going to have their hands full and probably going to stick to what we have now and have a bit higher for longer. And I think the UK are going to stay lagging behind sort of the European and the American reserves as they're going to cut. But I think the UK is going to stay put for now, perhaps go a little bit lower rates, but I don't have high expectations of them cutting rates anytime soon, or if they do, maybe 25 basis points, not 50 for sure.
Right, there's the chart. Now let's see the technical expert. What do you think of the FTSE there? That to me looks a bit concerning.
That's bearish to me. I'm bearish on that chart. It's telling me not to fight the trend, and currently the trend is looking down.
Now let's go to the NASDAQ. Same idea on the NASDAQ. Axel will be. We'll see if we can get Axel on the Teams chat this morning, see what he thinks of this, because NASDAQ back down to the level where he was getting bearish. There you go. There is the last few weeks on a 3-minute chart on the NASDAQ. That's not looking like the bulls are in control there, is it, Ange?
Nope. Bears definitely looking like they're in control at the moment, and it's not looking good for the open, I have to say. So
that's definitely going to be one to watch today. Apple really needs to come out tonight and shine. Otherwise, if Apple and Amazon disappoint tonight, where is the next support level in that NASDAQ? Ronnie, what do you think?
Yeah, I think you put it perfectly. It's all hanging on Apple and Amazon. The NASDAQ is extremely tech heavy, and we've seen drops with Meta and Microsoft already. Nvidia followed along, AMD as well. So I'm not very optimistic. I'm trading very cautiously there. If Apple beats, it's all dependent on the iPhone 16 demand. They haven't done much other stuff, so I think it's all hanging on Apple and Amazon. So if we can get a good result from them, or at least a decent result, we can see a slight sort of comeback. But any sort of miss would get the shares tumbling.
I'm kind of bearish, or slightly edging towards the bearish side for Apple, because I just think with everything I've read about the Apple 16 demand and deliveries, and especially with China, its biggest growth market, also weak, I'm expecting to hear not such a great read on the iPhone 16.
Yeah, I mean the Chinese market is one of the biggest markets for Apple and other companies as well. But it's not only that they're weak consumers there, but they're using domestic. They're switching to domestic options instead. So we see growth with retailers such as Xiaomi or Huawei instead. So they're taking market cap from these companies in the domestic market. So I would be very cautious when it comes to the estimates there. But the market are expecting Apple to beat, and if they expect it and they don't do it, the effect is going to be much worse than if they're already expecting a miss.
Right, so we'll take a look at treasuries there, Ronnie. So there's our up-to-date bond market prices. That again is giving me concerns, because the 2-year now at 417 and the 10-year almost approaching that 430 level. that's not particularly on good news. It's not like the US economy is flying, right? We saw those JOLTS numbers. This is ahead of the non-farm numbers this week. So is that 4.27, does that continue to go up because of concerns around the next president blowing out the budget in the US, or is it because of continued hopes around the US economy staying strong? So that yield spread there, 2-year against the 10-year, now 10 points over on the, 11 points on the yield curve there.
I'm looking to trade the VIX, actually. And I think there is still room to run. Ronnie, what do you think about the VIX? I'm just showing you my chart, if you can bring that up. But it is showing the polls, Harris versus Trump, still really deadlocked. I mean, this is from the, I'm looking at the poll on the NBC News site. And as you can see from the blues and the reds, I mean, not really much has changed as we creep closer and closer to that November 5th period. What's your take on this? What's the best way to trade this, Ronnie?
I wouldn't take either direction, really, because I think
a neutral
sort of
options trade then.
Yeah, exactly. The VIX is the safest option here because regardless of candidate outcome, the VIX is gonna spike. You know, if Trump wins, if Kamala wins, doesn't matter. The VIX is going to spike, and it's building up to that towards the election. But we also see, you know, the safe haven sort of people moving into the to the bond market, as Rich showed. People are parking their money there because it's simply safer than the volatile market there. So it's not only a safe haven, but it's working as a hedge as well towards the equity markets. And I think that shows the worry that the traders, investors has coming up to the election.
Now, Ronnie, are you going to pull an all-nighter with us on November the 5th?
There'll be traceable.
We'll see. We'll see. Perhaps if they supply me with some iron brew, I'll be there.
Wow.
Some iron brew. Well, we already know that we might have to be staying in the office next week due to tube strikes. I don't know if everybody has seen the threat next week, so it looks like there potentially could be tube strikes
all week, right?
Well, during the week, especially Thursday, I think they're focused on. It hasn't been announced yet, but that might lead us into just having to stay here in the office.
Yeah, get some sleeping bags. We got the bean bags up on the 6th floor as well. They're quite comfortable.
Dartboard, get the dartboard out. Ronnie, whilst you're saying that you've convinced me, I'm gonna buy the VIX, and I'm going to place a take profit or at Richie Rich's magic number. Right now it's at the 19.5 handle, and I'm gonna take it to Richie Rich's 25 handle. That's your.
Okay.
That's your.
Okay. Do you want to take and just screen there the VIX?
So I'm going to take that, and I'm going to put my limit there, and
where's that limit then?
25, because that's your spooky level, right?
That's it. Yeah. So what's the risk reward ratio then?
It was I pressed place deal already. It was 1 to 2.15, something like that. 2.4. I can't. 2.5. 2.5.
Yeah. Nice. Excellent. Right, let's take another look at the all sessions then. So Microsoft holding down 3.4, Meta down 3.8. Robinhood, well, eBay going lower, eBay down 8.8 now. And do we have any winners on the day? Uber up 1.3, Airbnb up. Maybe they've heard us say that we're going to have to stay in central London. Airbnb going slightly higher. And that looks like. So what about the UK? I'm really worried today. I think this is such an important day.
If you're going to take my chart, I've got the UK, the FTSE 100 winners and losers board up. Burberry is top of the leaderboard at the moment, 1.71. HSBC up almost 1% too. Barclays down 1.3%. Are you a fan of Burberry, Ronnie? Or just Hermes?
Sorry, there is one we've completely missed this morning. Smith and Nephew, Ronnie. Have you seen this morning?
Yeah.
Smith and Nephew disaster.
Wow, down almost 10.8% now.
So cutting its annual underlying revenue growth forecast, primarily hurt by weaker than expected performance in China. I did not know Smith & Nephew were big in China. Now expects underlying revenue growth of 4.5%, down from between 5 and 6. So Smith & Nephew went into that extended auction, is now down 11% on the day.
Smith & Nephew make all those orthopedic type things that will be great when China's population start aging rapidly, right?
Yeah, it doesn't look like it's working so far.
It's probably going to take a while there. And the fact of the matter is, because of their 4-2-1 structure, so 4 grandparents, 2 parents, 1 child, there are going to not be enough people to look after all those elderly people.
Ronnie, what do you see for the rest of the day? What's happening out there on the trading floor?
Yeah, so we're sort of watching any sort of portfolio restructuring or holdings restructuring following the budget, and see how people will position themselves with coming up. So a lot of the market sort of fits your stuff where they were sort of moving sideways leading up to the budget, because nobody really wanted to take a stance before the budget came. Now we have that sort of clarity, so I think people are going to position themselves based on that. So I think there's going to be a lot of repositioning. So the phones are going to be ringing, and we're going to be busy. But I look forward to it.
Well, that's it, because any of those not wanting to pay 24% capital gains tax in the future, then
they might want to switch over to spread bet.
Yeah. And also, yesterday was a key day, Ronnie, for a good example of buy and sell the fact, not the rumor, right? Because, like you rightly said, it was too close to call. I don't know about you. I cleared the decks beforehand, and then we were all kind of like trading there. But it was one of those times when, you know, I know that loads of people out there say, don't risk it, no biscuit. Have you heard that one? But yesterday was not one of those days. It was just too close to call.
Right, final look into, Ronnie, if you've got your French spread on today, you are a winner. SocGen up 7.7% now. SocGen up 7.7 against BNP down 6. That is a pair trade and a half.
Definitely.
Sorry, go on, Ronnie.
No, I was just saying that if you look BNP Paribas, they're also a victim of their industry colleagues. So all the other banks have performed well. Almost every other bank have performed well, whether it be Europe, UK, or US. Most of them performed really well. When you miss expectations in comparison to your peers who've done much better, the effect is magnified.
Fantastic. Thank you so much for joining us for that opening action. And we're going to go to a confirm and send to answer some questions. Ronnie, thank you for joining us.
Thank you for having me.
Let us know if you've got any questions you want us to answer.
Thanks, Ronnie.
Excellent.
Hello.
So here's our section when we answer your questions from home. Just a quick dip into the YouTube chat. It's all kicking off in there this morning. Charlie, good morning to you. Dale's boy, good morning to you. Our British Indian is back in town. Ben.
Ooh, is this the one that asked for the clock?
I hope you noticed that we've got your clock on the screen for you there. British Indian, thank you for joining once again. Dale's boy, Ben in New Zealand, trading a stock that I'd never heard of. Ben, what is that stock that you sent me a message on? Looked interesting. And Andrew, back with us this morning. Are we getting a Liz Truss replay in slow motion? Let's hope not.
Still having therapy from the Quarting disaster.
Well, yeah, we certainly don't want that this morning. Neil pointing out UK inflation forecast revised up as well. That's from the OBR, I believe, was at 0.5% higher, I think, Neil. Yep, and Monkey Man, the trend looks like it's falling off a cliff. So let's hope everything stabilizes while we go to answer your questions. What have we got? Number one, Ange.
So, Producer Fred, hit it up. How does the relative strength index work, and what is the best way to use it? So very simply, the RSI, it gives you momentum signals. If you go to a really good site that shows you a chart of this is Investopedia. I'll punch up a chart for you later on, but if you are new to this, it gives you a brief overview of how the RSI is calculated, how it can be plotted, and where it normally sits. It sits below the chart. But to save you all that trouble, the reason why the RSI is important is because it can give you signals to predict the behavior of the security, right? And it also can help you validate trends and trend reversals. So it's almost like your weather vane. Before Rich goes out for a jog in the morning and he needs to check the weather, he goes onto his weather app, and it kind of gives you a good idea of whether it's going to, for example, rain or not rain that day. So let's have a look at WTI, for example, one of the ones that I like trading. And here we are, WTI. If you bring that up, you can simply add your RSI by going to your analysis button. If you go and slide to the right-hand side, you'll see that bar chart thing. And if you go down, you can click on RSI. And what's also handy is for you, that those of you trader friends that are new to this, there's also a handy I button and information on the right hand side. Most people don't know about this. Rich, did you know about this?
I did not.
And it easily explains to you values below 30 seen as oversold, values above 70 as overbought. So I'm going to click on that, and there you have it right at the bottom. I'm just going to get rid of volume just for now, and take this up there so you can see that, because there you go, that's the 30 level clearly marked out for you, and there's the 70 level. And just by looking at this, this gives me a clear indication that we're not yet at overbought territory. We're nicely in the middle, so my trade, this gives me further confidence that my trade can still be in play. If it crosses that 70 or is near there, then of course I'll be taking another look at this trade. Or if it crosses the 30, I might think about, adding to this trade. So it is a good indicator. What I would say, if you come back to me, is that I wouldn't use this alone, right? It's not something that you just trade on in a vacuum. And if you look at the 10-minute chart on WTI, you can see that it has, fallen under that 30 line, and that indicates that it's undersold. If you look at the line here, what I would say is that you need to also check other indicators to see whether there is a divergence. And when there is a divergence, it means that you're potentially at a level where that trend could break out. So there you have it, the RSI in a nutshell.
Fantastic. And that is, it's one of the easier ones to use and understand, I feel. If you understand those levels, overbought, oversold, that gives you that some kind of reassurance on your positioning. I think that's, I find that a lot easier than the MACD or the Bollinger. So yeah, it's a nice starter point, I think.
And Rich, everyone's going to have their favorites, right? But it's about having the right mix for that particular instrument. And if you find that the RSI and another indicator works for you, then stick with that. I actually took advice from one of our trader friends that messaged in and said, Ange, do you have a trading diary? Do you remember that question?
Yeah, I do indeed.
And I've now decided that actually I am going to have a diary, because I'm starting to trade other things which I've never traded before, like MicroStrategy, which I got whacked on. So it's good to have...
Maybe you could do that online.
Yeah, that'd be a good one.
Yeah, everybody can kind of learn alongside.
And see how Ange has got it wrong so many times.
Actually, one of the interns here, Daniel, big shout out to you, Daniel. He suggested that he could do exactly that, some kind of summary of all the trades we've done. And then the interns here at IG, they do a sort of demo trading game where they all put their trade ideas in and see who's the best performer of all the interns. So he wanted us to go us against them, every trade we do on the show against every trade the interns do, and see who wins. So maybe that's a new segment for us, producer Fred. Yeah. The interns versus the studio. Right, let's go on to the second question there, one that might bring me out in cold sweats.
Oh,
What are the dangers of over-leveraging in a trading account? You see, it's starting to make me cough and splutter already. I unfortunately have had to go through this pain, right? I'm sure there are many of you out there, but I'd love to put this across as a warning signal. Over-leveraging in a trading account together with some kind of black swan event can be a horrible, horrible experience. This is why I urge you at home to be so careful on your risk management, know exactly what can happen in a big volatility event regarding your leverage positions. Now, let me take you back to February the 5th, 2018. The day before, or the 2 week before, we were getting up to all-time highs on the S&P. It was driven by that Trump election. So we'd had about a year, just over a year of Trump in power, and the market was going higher and higher and higher. It was driven by a very sanguine interest rate environment. It was driven by lower taxes, but it just got very similar to now. It got to a point where valuations were just too high. Jerome Powell made a negative comment on the potential of putting up interest rates, and suddenly the world collapsed. And that was because the only way to make money for a year and a half, 18 months, was to be short volatility. So Credit Suisse had a product called the XIV, right, which is VIX backwards. And it was like it was free money, right? Whenever somebody tells you it's like it's free money, be very, very wary, because there is a downside to that. People were leverage trading on this thing. And I unfortunately had a lot of short positions, and I had puts. So I thought I could also take on some of this to just help me pay for those, the theta on my puts, because I was losing money there. However, little did I really know that this thing could go up 100%. So if we go to the description of Volmageddon there. Now, volatility, or the VIX, increased more than 100% over the 24-hour period, right? Now, that's the fear gauge. The fear gauge was so low, as it has been in recent months, that Volmageddon was a combination of destructive connotations of Armageddon and the volatile nature of the market. But the VIX was at 18, and when the market started to drop on the comments from Jerome Powell, it went from 18 to 37 in 24 hours. Now, that meant everybody who was long ETF that was the value of which derived from being short volatility got wiped out. It went to zero. It was worth nothing. And I did have a leverage position in this, which I will never make the same mistake again. But I want to make sure you guys out there do not make the same mistake that I did. So really, please, when you're trading with leverage on your account, know exactly what your positions are. Know what your risk is in a worst case scenario, even in a black swan event, right? Now, that might be the Swissy, the day the Swissy depegged from the euro. You've got to know what the potential is, because that also wiped out a lot of people, and I do not want that to happen to you, the viewers out there. So be careful of your leverage. My leverage generally on my CFD accounts about 15 to 20% of equity. Okay, if you are on a leverage of above 70, so similar to your RSI there, check your leverage. If you're above 70, you know, you've got to either start thinking, do I reduce my positions? Do I maybe put a little bit more capital in? What do I do to manage that leverage equity usage? Because the worst feeling in the world, I was in Colombia, Medellin at the time. I remember walking through the streets of Colombia. I felt I'd been hit by a bus, a truck, or one of Pablo Escobar's hitmen. It was not a nice day. So yeah, please don't suffer the same as I did. I learned my lesson. Please learn from me without going through it yourself.
Why you say to me quite often, you say, it's like free money. For me, when I hear you say that, should that be a...
There's your red flag.
like Richard said.
It's the other thing, what's the other phrase that people use? It's a no-brainer. To me, if something's a no-brainer, then maybe it's for people with no brains, because that's the ones that go into it.
I get it. It's like when you go to Thailand and you say to the driver, are you sure you're going to get us there in time? He's giving me that cheeky look. When you sure you're going to get me there in time? And they go, buy me panha, which means no problem, don't worry, no problem. And you're like, I have to worry now because...
if an Irishman tells you, if you ask an Irishman for directions and he goes, yeah, sure, it's just 5 minutes down the road.
It's going to be 50 minutes.
At least.
Is that, maybe Frank's not half Italian, maybe he's half Irish. Because he said, it's just a few blocks that way. It turned out to be like a 50-mile walk.
That's right. It's the optimist. Like Caleb. Caleb's a good man in our gallery today. He's ever the optimist, keeps us all smiling, keeps us all bright.
Speaking of Caleb, I have an apology for Caleb. I had so many names to remember. There was a shout out, and I was thanking the crew, and I missed out a vital, important person, which is Caleb. And he was watching the show with his girlfriend, Michelle. We got that right? We got it right? And I was trying to remember all these names, thinking like, if I miss one PCM, I'm going to really get murdered if I go out there. So thank you so much to Caleb as well, that like everyone here has been so supportive. He's like, that's right.
He's also my advisor.
Ooh, on? What is...
If I come off the show and he goes, that's rubbish.
Oh,
you were rubbish today, Rich.
That is harsh, but not as harsh as my 9-year-old daughter, because that week I was getting all these amazing messages, you know, of support from, you know, people from the desk and also from Rich here, and your pictures would show up. She'd see them pinging up on my phone, and she would then say, oh, I think out of all of them, Luke's the most handsome. I hope Luke's listening.
Right, moving on. Question 3.
And then she said, then she saw Rich's picture and I went, actually, no, Rich is more
Now you're just making
handsome.
it up.
No, I'm not.
Let's go on to question 3.
And then her line after a brief pause was, but I think Rich knows he's handsome. Not bad for a 9-year-old, right? Not bad. Right, oh.
I don't know what you mean. What are you talking about?
Actually, that's an improvement. Right. How do I find RSI divergences? And are they reliable indicators like Richie Rich and his? It's like free money. It's like free money. First of all, a big caveat here. All indicators don't exist on their own. And you need to get the full picture and using the right ones that suit your style and how well you know the instrument. Also, not forgetting fundamental analysis. As you know, Rich trades fundamentals. Technicals give you ideas of where your exit and entry points are. Fundamentals show you how hard to hit it. Okay, so divergence is something that technicians do look out for because we look out for anything that is contrarian or something that's not normal as flags. And divergence can signal possible reversals, but these signals are only stronger when they align with an overall trend. So, for example, I'm just going to show you my chart here first because there's a handy image from Investopedia that shows you examples of divergence signals. So you can see falling lows there on the blue line and that coming at the same time as rising RSI highs. So that is a divergence signal that could tell you that this is about to reverse. This price action is about to reverse. So I'm going to show you the US Tech 100 now. And as you can see there, we're seeing the Tech 100 rising. And I'm going to try and see if I can draw this. We need a telestrator at some point, don't we? Like one that you can draw with your finger. 1 minute. How much time have I got, Caleb, for my not very great drawing? But if you look, and I'm going to try and draw that for you, can you see that there is a there we go, the start of a divergence there. And if the RSI moves lower, we could see an even further divergence. Just all it says to me is that this is a flag to say, hey, check your trade. Things could be changing. If I have a triple bottom that is heading up, but my RSI is heading down, that is also a divergence for me. Trader friends, it's just a handy, think of it as a buddy, right? That kind of puts an arm on your shoulder and says, I think you need to maybe look at this. You might not change it, but now might be the time to relook your position on this trade.
Right, you'll see me furiously scribbling away because I'm looking at the FTSE and I just don't think we've got that much downside on it. So I want to do an options trade before we go to break. Sorry, producer Fred, I'm going to run over, but I want to get this on. So I'm going to sell a 7,850 put for November 15th expiry. Okay, so I'm going to take in 22 points there. I'm going to use that to buy some upside. So that's taking in £220. Then we're currently trading 81.10. I think we possibly get up to 83.50 level. I want to take advantage of that. So at 83.50, I'm going to receive 13 ticks. So I add that to my balance. So there we go. I'm going to sell that, take in 13.5. So selling the 83.50. So that's all together. I have, what did I say the first one was? 22. So 35 points to use. So I'm going to buy an 8,200. So it's an 8,200, 83.50 call spread that I'll be in for net 20 points. And that is for my belief that we get back above 8,200.
What's your expiry on that?
November 15th expiry. So we're talking just over 2 weeks. 2 weeks on Friday.
Interesting.
Right, that'll do me for the FTSE. I just didn't want to let that potential upside disappear. Remember, the lower level was 7,850 there. If we're testing that, then the budget has gone wrong.
Just so, just a gentle reminder, I'm sure you're already aware, but that covers the US election period.
That's right. Yeah, money flowing into the FTSE out of America, hopefully.
Is this your Mukba Bull MAGA?
Long UK, short US.
Yeah,
yeah.
MAGA bear. There we are.
Great, right, let's go to the break, and afterwards we're going to have a Tom Takeover Halloween special.
Ooh, rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trending platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into three key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Hello and welcome back. It is the Tom Takeover with me, Tom Wolstenholme, and my assistant, Rich.
Very good. Top of the morning to you.
You too. Happy Halloween.
Indeed, and happy last day of the month, which is always a big one in the stock markets. And it looks like today the sell-off might be taking place. We've been waiting for this for weeks, Axel and I. We've tried, we've been stopped out. We've tried, we've been stopped out. So, of course, the optimist me on the NASDAQ actually going down for a change, today might be the day.
And last day of the month is important because?
So hedge funds and pension funds have to report their performance monthly, right? So if you, for example, it's like a report card. So if I was writing my report card and you were invested in me,
unlikely,
then I would say, Dear Tom, so this month I am worried about US valuations, and I think that we might be at an all-time high. Therefore, I'm reducing my positions in equities. If you do that, you've got to have done it by the last day of the month.
To let who know? To let your investors know that
all your investors, and the market as well. You know, the market generally hears about your performance. So there'll be maybe a big flurry of into the last half hour. There'll be big changes
of today. Great.
Yeah.
Cool. Well, look, yesterday was the budget.
Good story, Rich.
It was a good story.
Thank you.
I look forward to your report card later.
Yes, there you go. I'll write your report card on my performance of the month. Actually, I have to check what that is. I'm not sure if I want to look.
So yesterday was the budget.
Yeah.
Tuesday we looked at your version of the budget.
Yes.
We did, didn't we?
Yeah.
I gave you some options. You chose the things that you were going to put into the budget, of which you chose 3. You didn't like my
Green bonds.
Yeah.
Electric vehicles.
Yeah.
Subsidies.
Yeah.
And
second homes.
Okay, good.
That was the one. So your green bonds. Unfortunately, Rachel didn't like that one.
Yeah, shame.
So no mention of green bond expansion. So nothing there. You didn't like the scone support scheme, so we'll skip that one. You did like you didn't like it, but you thought that the second property surtax would come in, and it did, much to the displeasure of your friends on your WhatsApp group, I guess.
Yeah. Well, no, it was the non-DOMs being, what was the word? Abolished. They didn't like being abolished.
Okay. No one does.
Yeah.
So yeah, there was a surcharge on second homes increased to 5%. So you did get that one right.
Which is great for the first-time buyer. And hopefully at some point I will be a first-time buyer. Although the level of where your stamp duty, first-time buyers originally could buy a home up to 400 and maybe 500,000
ish
without paying stamp duty, and that's dropping
Okay.
quite significantly, I think.
Is it?
Yeah, about 375, something like that.
Okay. Because I'm about to buy a house. I'm due to exchange next week, hopefully. So I don't think this affects me.
No, you're too late.
I don't know. I don't think so.
Yeah.
What do you mean?
Oh no, your stamp duty is going to go through the roof.
I don't think it is. I
actually don't.
I
know.
don't.
It might be.
No, I don't think. I don't think it
I feel
affects.
bad now.
But what was funny was reading it. It was like changes come into effect from midnight tonight, and I was like, that's crazy. Normally you get, normally it's like 4th of October, 2020, whatever.
Yeah.
But
no, it was straight in, and hence why we have seen a lot of selling in the FTSE. People getting out of those positions that they only pay 20% capital gains tax rather than 24%.
Yeah.
If they sold yesterday, I think. I'm not sure exactly the date that comes in.
Okay. And the last one was EV subsidies. You reckon there would be some kind of increased subsidy?
Yeah, was there?
So Rachel said she'll maintain the incentives for the EV.
Good, I get that point then.
And she'll increase the differential between fully electric and other vehicles.
Excellent.
So yeah, you actually got 2 points. So congratulations.
Yeah, because you were negative scoring, and none of the other ones actually came in, did they?
No, none of the others came in.
Technically speaking, I just got one wrong, that I thought there would be more green bonds sold.
Yeah, I mean, obviously on that particular one, you couldn't have got 10 points. So you've done well.
I've done 2 out of 3.
You've done very well. But today is a new day and loads of earnings this week. I'm sure you've discussed some already.
Most definitely.
But
Where's this going?
Well, we're going to play. It's Halloween.
Mm-hmm.
Lots of earnings.
I like your mask, by the way.
Thank you. That puts us in the perfect position for a trick or treat earnings call.
Ooh, trick or treat earnings call. Okay.
Okay. So we'll take a look at a few of the earnings that have come out this week. Lots from Tuesday, some from Wednesday, and trick or treat. So how it's going to work is they all had a forecasted earnings per share.
Ooh, who's hit and who's missed?
Who's hit and who's missed. So hit would be treat, miss would be trick.
Okay.
Okay?
Yeah.
We'll take a little look at the share price and see what impact it's had.
Right, let me just trick or...
So remember, it's 2 words, trick. What's
Trick
one word?
is bad.
Yeah.
Right.
Trick, bad, treat, good.
Okay.
Hit, miss. It's too confusing. I should have made it simpler, I knew it. Okay, look, well, I'll tell you what, we'll start off nice and easy then, because the terminology is difficult. So Microsoft had a forecasted EPS, earnings per share, of $3.10.
Mm-hmm.
Was that a trick or a treat?
That is a treat, because they beat.
They did. So they forecasted $3.10. They actually came in at $3.30. And right now, interestingly, In all sessions, they're down 4%.
Their guidance was weak, unfortunately. So they hit numbers for the previous quarter. The thing is, like, you know, remember that, you know, guidance is particularly, it's like when you get home to Mrs. Wilson home, right? And she says, okay, have you got the shopping in? Right?
Typically, no.
So, but if you knew that she was going to ask that on the way home, you get the shopping in, right? So that's fine. Everything in the past, you can manage, and Microsoft will have managed. They'll have called all the banks and they'll go, right, we're going to make 310. We're going to make 310. So you guide people. So you obviously guide at 2 beat. So you're always better than expectations, unless things are really bad. So you're managing those expectations. However, the first part of managing expectations is then about talking about forward guidance. And forward guidance is where you, if you look at Next, for example, Next have raised guidance 7 times in a row now because they keep on under-promising and over-delivering. So Simon Wilson is the best in the world at this, right? Whereas...
Is this where so they're setting their forecast, they're not setting it, they're setting it close to where they think they'll be, but not extending themselves too much. Is that what you're saying?
Yeah, and if you're going to put caution in, you put caution in the forward guidance, right? So you know that you'll get a hit on it a little bit in the short term, but then over the longer term, you haven't set yourself too high a bar. If you set yourself too high a bar, that's when you get the like down 10, down 15s that we've got in, you know, the likes of Robinhood today. So Robinhood's down 11%, eBay down 9. So yeah, you don't want to set yourself up for a fall. You want to set the market up for, okay, maybe they're just being cautious, but then you come out and you beat numbers.
So in the case that they beat their forecasted earnings, but they're still down, what's going on?
That's when they're being maybe a little bit more cautious in the forward guidance than the market likes.
Okay.
Because analysts, like we go back to Marks and Spencer's, right? Analysts say, right, for this year, we're going to make 23 pence of earnings. Next year, we think we'll make between 23 and 25. So you're anywhere from flat earnings to up 10%. If the market's already priced in 26, then it's not going to be happy.
Okay. So although they hit their earnings for the previous quarter, it's their projected earnings for next time.
It's always about forward guidance. That's
okay.
Right. Yeah.
But you got that right. Well done. 1 point.
Thank you.
No problem. Okay. Next up, MicroStrategy. They had a forecasted earnings per share of minus 12 cents. How did they do?
I don't know this one. Coinbase missed on both. That'll be your next one. But MicroStrategy, I think they probably, that's probably a treat.
No, that was a trick. So their actual earnings per share came in at, calm down, at minus $1.56. So they missed it by quite a way.
They've done that when all they've got is Bitcoin, and Bitcoin's near all-time highs.
And then
Crazy.
MicroStrategy, if we look at their price at the moment, so today, up 0.5%.
Right, okay. Not too bad.
So next up, we have Alphabet, ticker Goog.
Ah, yes.
So they forecasted EPS was $1.84.
Mashed it. Hit it out the park. It's got to be, it's over 2, isn't it? Over $2. I'll go 2.14, something like
Very
that.
close. $2.12 was their actual earnings per share.
That was a treat.
That was a treat. And today, they're trading down over 1%.
That's right, yeah. So they must be almost back down to where they were not quite. Let's look at the 1 hour there. So, oh dear, excuse me. The great numbers from Alphabet, remember, a couple of nights ago, seems like so long ago, you can see they've now given up what's that? 2/3 of the gains. I'm tempted to go back in there. I'm going to set a buy order at the, where did they get to? 170.50. Because I did own some of these. I got stopped out.
Okay. And you were long, were you?
I was long, that's right. So price level, I'm going to go back in at 170.8, and with a what was the price? I've got to put buy. There we go. With a 50 stop. No, more than that. 200 stop. Yeah, there we go. 168 and a limit of 400.
So we're looking at about 2 to 1.
Let's take that up. Let's take it back up to 178. So yeah, I am bearish on the NASDAQ, but I'm short NASDAQ. So I'd like to buy these on any weakness because they are the good performer.
Okay.
Boom. Right,
Great
that's
stuff.
in. That's in.
Great stuff. Next up, we have American Tower.
Oh, I don't know them.
Do you know them? Do you know what they do?
I would imagine it's mobile phone towers.
No, they build towers in America.
Ah,
So a good
that's
name.
impressive. Yeah, that's imagination.
Forecasted earnings per share $1.58. Trick or treat.
They build residential towers.
They build towers in America.
It's going to be telecoms towers, isn't it? I will go. The fact that you've chosen it's very random, so it's either going to be up a lot or down a lot. Trick.
That is a trick. I picked that one just because it was so. That was the largest difference I saw. So they had a forecasted earnings per share of $1.58, and they came in at minus $1.69. So $1.69. So quite a big difference there. They're not open yet, but they took a big hit to their price.
Ooh, yeah, painful.
Yesterday
Okay, American Tower.
as a result of that.
American Tower is an American real estate investment trust. It's an investment trust which owns, develops, and operates wireless and broadcast communications infrastructure. I don't know, that sounds something like a telecom tower to me.
Maybe it is.
So a bit like Vantage Towers over here. Got you. Good. Okay.
Okay, next up we have Visa. So Visa had a forecasted earnings per share of $2.08. How do you think they got on? Trick or treat?
That is a treat. Visa did well, up 8% on volumes as well. So I think Visa did well.
Visa did do well. They hit their target. They came in earnings per share $2.71, and currently they're looking. So their share price today down 0.3%.
Okay. Good.
Good. Well done. Very good. Okay. Next up,
Monkey Man just asking, why is Rich the same color as his shirt? That's true. Looking a bit rouge today.
been in the sauna.
Maybe too much coffee. Don't know.
Well, you do have a habit of between the segments sprinting.
Yeah, that's true. Yeah, I got
sprinting
caught
back.
out there.
So I think you're probably causing yourself difficulties.
Yeah. Right. Okay. So, Monkey Man, I don't know the answer to that. That's a good one. I need to. Did that is that coming over the TV as well?
I can hear it. Yeah.
So Martin Harris is unavailable by the sounds of it. Now we know what's happening in the next segment. Right. Okay.
Advanced micro devices.
Ooh.
You know this one?
AMD.
So forecasted earnings per share 92 cents. How do you think they got on?
Well, the stock was down 12%. I know that. But was it down because of this quarter, or like we were just talking about, forward guidance? AMD, if it was down that much, but how? It couldn't miss. You cannot miss if you're AMD. So I will go that they did not miss numbers, but the guidance was terrible.
Okay. They hit that. You're going.
I'm going. Sorry, treat.
You're going treat. It is a treat. So their forecast earnings was 92 cents, and they got 92 cents
Ooh, on the button.
on the nose.
Oh,
Yeah.
which usually means that, you know, something's been kind of tweaked here and there. Always be very suspicious of a company that meets its guidance to the decimal
cent.
point. Yeah.
Right, so they've done some bit of jiggery pokery there, have they?
Yeah.
Okay, you heard it here first. And today, if we look at,
Allegedly, you know, that's just, we're talking about a wide space, not AMD in particular.
we're going to have to get another disclaimer. The legal department really is busy when you're around. Today, Advanced Micro Devices down 1.2%.
Yeah, so further, down further, yeah, painful.
Okay, good stuff. Next up, we spoke about this the other day. Still haven't got a hamburger from you, but I also haven't got E. coli, so that's good. McDonald's.
I tell you somebody who does have the hamburger. So producer Fred was out on the lash last night.
Was he? He looks.
He was.
He doesn't look like he was.
He was at a gig, and he sent me a message 11:30 last night with a big McDonald's bag. And when I say a big McDonald's bag, I hope it was him and his whole family that was there, because it was. We're not talking a Happy Meal. We're talking about the whole.
And you're happy to
Happy
to
buffet.
shame him live.
Oh yeah, absolutely.
That was a private picture. So he's helped their earnings. Yeah, so they forecasted $3.20. How do you think they did?
I would imagine McDonald's would beat, but again, I don't think it wasn't taken that well. The stock was down, but I would think it would be a small beat, so a small treat, like a burger and fries itself.
You are, as ever, a fountain of knowledge. They narrowly beat it. They came in $3.23, so 3 cents above forecast.
What would you do if you were guiding the market? How much would you beat by?
Well, based on what these companies that seem to know what they're doing do, they look like they want to just beat it, just ever so slightly.
So what about your boss? When you say to your boss, I'm going to have the bit of work ready by Friday, do you have it ready? Do you know you're going to be finished on Thursday?
You don't really want to come in too early, do you? Because you're going to get landed with a load more work.
Yeah, well, yeah, exactly.
You also don't want to set your goals ever so high, you know?
See, it all translates through to the finance markets.
It's all pretty much the same, isn't it?
Yeah.
It's all pretty much the same. So McDonald's today, how they looking?
Which reminds me, actually, the viewers for this show, I'll tell you, we're smashing targets, of course. We love you lot in the comments, but we do need some likes. I don't think anybody really does likes on YouTube, do they? So yeah, we would much appreciate any of the viewers there. Smash that like button. I think you can only do it once, can't you? Share it with your friends. Comment. What's it? Like, comment, follow.
But only
all that rubbish.
Only if Rich gets the next one right.
Okay, yeah. Only if I get the next one right do we like the YouTube.
The next one is Electronic Arts, which you may know by its soundbite of EA Sports.
It's in the game.
That's the one. How do you think they got on? So they had a forecasted EPS of $2.02.
Oh, I don't know, because they are so volatile. EA Sports, and we didn't cover this one. Is it good? EA Sports, I don't know, but we have to go to break soon, so I'm just going to throw it out that they were a trick.
They were a trick. They came in $1.11, so they missed it by a long way. Wow.
So it's so hard. You think all the gamers out there, Caleb's a massive gamer, but EA Sports it's something I'd want to invest in for the that sort of theme, right? If it's just typical, if you want a theme, then you think, right, Electronic Arts, it's in the game, right? They did such a great. But let's have a look at that share price graph, because I don't think. See if I can find the EA.
It's under Electronic Arts.
Electronic, as in its name.
As in its name.
Why can't I find that? There it is. Now, let's have a look at this graph over the years, because I don't think it's been great. It's absolutely talking rubbish. Where's 2001 then? I remember. Look at that. That is a nice graph. Wow. Electronic Arts, you surprised me. The last time I looked at this chart must have been like down here, but it's that. Oof, right. Caleb, let me know what games are coming out on Electronic Arts, please, because that's one we're going to take a look at more later. That is primed for a breakout. How's that been?
It's been excellent. You got 7 out of 8, so I think you'll be happy for the rest of the day, and probably more pleasant to Ange, and it will all just go very well.
You going to come back next week?
I can come back next week.
Any 5Ks this weekend?
No, I'll take it easy, I think.
Right.
Because I don't want to get, much like my forecasted time, I don't want to put it too far, because otherwise you'll never catch it.
That's it. So your next thing's to break 90 minutes 30, I hope.
Exactly. And yours is to...
Right. Great, Matt. Well, jog on. We'll see you after the break. We've got Martin Harris joining Angeline in the hot seat.
2 simple words that cover a world of opportunity. Like all trading, financial trading is about exchange and ownership, the buying and selling of financial instruments. These instruments can be cash instruments, such as shares, currencies, and bonds. Or they can be derivatives, such as CFDs, futures, and options. Financial trading encompasses the full range of possibilities for trading in the financial domain. Whatever the instrument, the idea is always the same: to benefit from movements in price. If you buy low and sell high, you profit. Sell lower than you buy, and you make a loss. Sounds simple enough, but there are millions of individuals, companies, institutions, and even governments all trying to profit at the same time. Many prices are always on the move, and the bigger the movements, the more volatile the market, which could provide more opportunities to profit, but also increase risk. Financial trading is normally carried out in one of 2 ways. Via an exchange, a highly organized marketplace where members trade a specific kind of instrument. For example, US shares on the New York Stock Exchange. Or over-the-counter, where trades are made directly between 2 parties, like when you trade currencies at the airport or buy and sell CFDs from your provider. Then there are different kinds of trader. Some stick to a specific kind of instrument or asset class. Others have more diverse portfolios. Some like to immerse themselves in research, scouring the news and financial reports to find their next trade. Some others base their decisions on statistical trends. Some take lots of short-term positions, opening and closing trades in a matter of days, hours, and even seconds. Others take a more long-term view and hold assets for months or years. But all traders share one thing in common: risk. It's essential to balance the potential for profit with the possibility of loss, because that's what financial trading is all about.
Hey, welcome back, and we are now live from the trade desk with none other than Smart Portfolio's Martin Harris. Martin, thank you so much for joining us.
Thank you for having me, Angeline.
How's it going?
Yeah, everything's going well. How are things your side?
It's pretty good. I have to say though, you know, we covered and traded the budget yesterday, and I'm sure you heard us all on the floor with Rachel Reeves on very loud, and poor Axel was trying to work as we were all shouting and trading at the same time, but it was really exciting. I have to say that I was whacked by 4 o'clock, and you know, just was in bed by about 8:30. How about you?
Yeah, something similar, but you know, obviously not celebrating the penny for the pint probably as much as I saw the guys on the floor doing. Markets went a little bit softer post that result, but I saw a lot of the financial services firms, you know, a lot of concerns around particularly taxes coming into the betting companies, you know, so that eased off, and we saw betting firms, the stock prices just coming up post that budget announcement.
Yeah, right. I think it was like after 1:30 when everyone kind of looked at their watches and thought, "What she's looks like she's moved on to schools and infrastructure now." So I think that sigh
Yeah,
of
and
relief,
private jets,
yeah, was
tariffs.
around that time. But plenty more to come this week. And let's talk about, this monster week that is still ongoing where, the earnings and macro just collide and all this ahead of that, of course, a huge election, which is incoming. But Amazon, what are you looking out for Amazon?
Yeah, that's right, Angeline. So I think it's a micro meets macro meets politics in next week. This week, just alongside Amazon, we've had and we still have Google, Apple, Microsoft, Meta, and Amazon reporting. So a lot of volatility with regards to Amazon. That's going to be happening later today. So that's after the close. So I was looking at the tip ranks stock screener earlier. So after the close, in terms of Amazon, tip ranks are putting out a target price of, I think, $224. Currently, Amazon trading at around 192. That was after the close yesterday. Stock price was up about 1% yesterday. So just got a few notes that I want to go through. Pretty much driver that I'm looking at for this earnings update is the amount of money that they've been spending on Project Kuiper. So Kuiper is their constellation satellite business that they're looking to launch, not yet in flight, but they're spending about $600 million a quarter on Project Kuiper. This is going to pretty much put them in direct competition with businesses like Starlink, and will allow them to they're looking to have a network of just over 3,000 satellites in orbit, and that is by 2027. So we expect Project Kuiper to potentially kick off first quarter of next year, and they could launch about 400 satellites a quarter, and from there they'll be able to just have essentially just a telecommunications network in the sky. So we're looking at Project Kuiper, looking at the cost there. If we are conservative with sort of accounting estimates, and we want to expense it, and we're not looking to depreciate it over time, we expect Project Kuiper to cost in the region of about $13 billion. So we'd like to see how that that sort of expense run rate is moving along. But other than that, also the next bit that we're looking for is how much money they are spending on their sports programs. That's going to potentially be the next driver for the Amazon Prime business, is how much revenue they're able to generate from displaying sports. So they've got deals with the Premier League, they've got deals with NFL, and so on. So they've all of these really big tickets, really expensive sporting events that they're looking to display on Amazon Prime. So that's coming out later. And I think, for Q3, we're looking at, a bit of investor expectations, probably clustering around the high end of guidance ranges. So that is $154 to $158 billion of revenue. And so that is about $11.50 of operating income. And so, we're looking at Amazon Web Services, their growth expectations around 20 to 21%. So if we see any of those numbers fall short, we could see a sell-off in the stock. And again, also if there's large expenses related to that Project Kuiper.
I like the fact that you've pointed out Kuiper, because that's the bit that I'm most excited about. And just for our trader friends, whilst Martin was talking, I also punched up tip ranks for Amazon, and you can easily toggle through to that from the chart on the IG platform all the way to the right-hand side where you can see tip ranks there, and it gives you a smart score and also the analyst consensus. And if you click the View More button, that shows you all the analysts that have been polled, their forecasts which have been polled and captured here. But back to Kuiper. Last week, whilst I was remotely working, I did take some time in the night, because there were some nights that were really clear, to try and catch the wolf moon and also the meteor shower that was expected to be clearest then. And I noticed, I must have been looking at Amazon's, satellites, because there were so many moving stars that they couldn't possibly be stars.
Yeah, probably most likely. So that they haven't any of the satellites yet. They're working with a number of partners that, Starlink, not Starlink, but SpaceX is actually one of their partners. So most likely a SpaceX related satellite that was up there, because they're doing so much shipping for other companies to get satellites into orbit.
Totally. I thought Amazon had launched 2 prototypes, Kuipersat 1 and Kuipersat 2.
Ooh.
Maybe I've, yeah.
No, you're probably right on that. I think I'm looking at just when the project is in flight, and so they don't yet have a
It's
MVP
definitely an
available.
interesting point that you make, though, because I think this is going to be the forefront of their revenue stream. So I'll be looking at that as well as, you know, their cloud services. What others are you? I'm quite bullish Amazon, but bearish Meta. And also, I want to take those trades off the table before NFPs. What's your take?
So look, I think what we do see is that those names I mentioned earlier, Google, Amazon, Meta, Facebook, Apple, Microsoft, all of them, when they release results, we've seen a 100 basis points move in the S&P 500. So what we could say for someone who's potentially looking to trade these markets is that volatility picks up when they release results. And so if they're inclined to do so, something like holding a straddle on the S&P 500, looking at something slightly longer dated, so November 7, November 8, that is where you can potentially trade these markets.
Cool. And talk us through your straddle strategy whilst I punch it up.
Yeah, so just holding just a buying straddle on the S&P 500 with an expiration date around November 7, November 8, so that you can build in some of the election volatility as well.
Right, I've got the...
We should see results from the election coming up.
Okay, and then talk us through the straddle. I've got the Tasty platform up. Talk us through where you'd have the straddles.
So with a 100 basis points either side, we would probably be looking at just taking wherever we are in the market.
So on the money at the moment, 5625.
Yep, and looking to, I mean, I don't know how where you want to, you know, into how aggressive you want to be, but we're looking at buying calls 100 basis points away from where we are at the moment, and then also holding those puts 100 basis points away from where we are.
Gotcha. Great.
Yeah, maybe. So yeah, that's really kind of the idea, and we can look at that later today, maybe when the market opens. But that's kind of the idea of what we're looking at. So payroll data as well, historical average, we get a 94 basis point move. That's on the last 24 months. So when payrolls come out, there's potential for a 94 basis point move just in the S&P 500. Currently, we're expecting a 90,000 number on payroll growth, and there could be, you know, that's large impact from all of the hurricanes that have been happening in the States.
What's your gut feel though? What's your call on the number? I'm thinking, you know, with the hurricanes as well as all the strike action, I'm thinking a weaker than expected number.
Ooh, it's a tough one to call, Angeline. I think I'm going to go with something pretty close to the 90,000. I think that really the reaction is in rates post that number coming out. I think the Fed is very sensitive towards labor at the moment and jobs numbers, and so currently we've got this kind of built-in inflation expectation due to some other stronger economic data coming out of the US, but also this inflationary, this potential Trump trade, which looks very inflationary, and so we're seeing this kind of inflation premium, risk premium being built into markets at the moment. So the guidance that the payroll gives might be able to really sort of suppress these higher yields that we're seeing at the moment. I think, you know, we saw the Fed cut rates by 50 basis points, and the 10-year has gone up 60 basis points in the yield. So, you know, there's a lot of inflation baked into the market, and so a softer jobs number could be supportive towards cutting rates further.
Do you think it's largely all been priced in already? Martin, I was looking to put a trade on the dollar, but that was kind of my thinking too, that maybe it's already all baked in, so I went with a bullish position on the VIX instead. But do you have a dollar trade that you're looking at?
I think that if we were to say like where the tariffs go, is that so like what kind of what does a Trump presidency look like potentially in terms of where markets go? It's less impactful in equities. Obviously, you get this rise due to the potential tax cuts. The tariffs take long to come into play, but they are, if we look at what happened in the previous in Trump's previous presidency, really strong for US dollar. So a long dollar would potentially be something that could work out, a long dollar trade.
We had a question from a viewer and trader, Bilal, as well, talking about where European indices might go if we get a Trump surprise victory, right? Like the last time, and particularly the DAX, he was looking at that. And from memory, because I covered the last time Trump won, we saw a bit of a dip at first, but then by the end of the trading day, once everything had settled and, you know, Trump was clearly, you know, going to be president, I seem to recall most European markets ended in the black. Do you see the same thing happening again?
Potentially. I think, though, that a Trump victory could influence the ECB to accelerate some cuts. So there could be some potential benefits for them based on rate cuts. But it's in general, it's negative for European markets who could be impacted by the tariffs, and that's why we see the ECB having to move their hand to try and bolster up European economies. Bank of Japan and other central banks may also have to kind of adjust to the new trade dynamics that could come through, especially if we get a Republican sweep.
I'm thinking bearish Chinese-related stocks, especially if these stocks could be hit by the tariffs, and potentially bullish US weapons manufacturers. What do you think of that thesis?
So I think China is an interesting one at the moment. I think with all of the stimulus potentially at play, it would be tricky to go all out just on a short position there. I think that certain sectors within China, particularly what we'll talk about as the K-Web sectors, I think there's an ETF from one of the issuers called the K-Web, which is the Chinese media companies. We're particularly bullish on Chinese media. A lot of the online consumer goods businesses really benefit from these stimulus measures. General China economy, still we're concerned about what's happening in the property sector and things like that. So it would really, I think there's too much stimulus at play in China to take an overall bear look on them, but you could potentially look at selling some rallies.
And speaking of China, I know you do a lot of research and watch the space very closely. We've got tons of questions coming in saying, you know, are we going to get more of the stimulus that was promised earlier on? Are we going to see, you know, more and more shots in the arm from the Chinese to stimulate their economy? Because, you know, lots of statistics that I've read out there have said that even though we have this stimulus incoming and about to, you know, hit the Chinese market, it's just going to slow what will effectively be a slowdown for them and not help them avoid it. Do you share that view?
It's you know, we need to see how it plays out. A lot of the stimulus discussion, you know, hasn't yet really been made clear as to where it's going to end up. But the package that has been discussed is absolutely enormous. And when China stimulate markets, the short-term effect is huge. And so we've seen that happen a number of times over the last 10 years. It's unless you're prepared to be burnt, you don't want to be short during that time. And anticipating where the stimulus goes is going to be really, you know, where the winning can be done. It's a bit too early to tell, but perhaps long term, yes, we see a kind of reversion back to the mean of an organic growth rate. But in the short to medium term, the stimulus really does put a large impact on the prices of equity markets in China. I wouldn't want to be trying to bet against it.
Right, I'll take a look at K-Web after this. Right, we've got less than 2 minutes to go.
Yeah, Crane shares, K-Web.
What have you got? What have you got planned later on today? Anything special for Halloween?
I'm gonna go do some sort of Halloween party later tonight.
Do you have to
Still need to
dress
figure
up?
out what I'm gonna dress up at. Yeah, yeah.
What?
time to dress.
What are you going to wear?
No idea. We're gonna figure that out.
Can you send us a picture?
I'll send a picture.
Ah, good man. We are going to leave it there. As ever, pleasure having you on, Martin Harris from IG Smart Portfolios. Any questions for Martin, please drop them in the comments box right here. And be sure to like this. And also, I'll put you through straight to him if you like, if you have more pertinent questions about China or how to trade that. And we'll have Rich back for What's Next. Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Right, we are in for market measures, and we've got a special market measures today because Sahil heard that Angeline wants to buy volatility.
I do. I'm on the hunt for volatility, Sahil, especially on a day like today, before we get those big tech earnings, right? I want to use volatility to kind of give me some ideas of some positions I can take beforehand.
So, how do you make vol your friend? Right? Today's market measures is going to be how skewed strikes scale with IV. He's given us a tongue twister there. How skewed strikes scale with IV.
I'm sure there's an acronym somewhere there.
So, many variables in the options market change when vol is higher, such as the distances between option strikes and the underlying price. Now, changes in the strike distances are particularly interesting for underlyings that exhibit skew. So let's look at how your call and put strikes scale with increasing volatility for an underlying with significant put skew, right? Now, this is especially in the spiders. So when the market is dropping, when vol is going higher, you're going to learn today how you can set your 16 delta puts and calls much wider, right? So you've got a much larger area or distance of safety, right? So that's really important for in high vol markets. If you go down to those 16 deltas, they're much wider. You can either make more money or you can have a lot more area of safety. So the key difference between trading in high vol and low IV markets is that premium sellers can collect richer premiums when implied vol is elevated. Higher premiums allow for setting put and call strikes further out for the same delta options, providing more room to be profitable. And that's certainly what we like. We like more safety, but just as profitable. So the study that Sahil's looked at is on the spiders, the VIX from 2005 until 2021, 45 days to expiry, 16 delta puts and calls. Now we're going to look at the average strike distance as a percentage of the underlying price for puts and calls in the following IV ranges. Okay, so what percentage away from the underlying price can you set your puts and calls?
There are all those different ranges.
That's right, yeah. So that's the vol. And where did you buy vol earlier?
I bought vol at,
I think it was 18 points.
Yes, I think it was 17 and a half. And then my take profit was Richie Rich's 25.
So there you go. So you're right in that lowest range, right? Now remember, vol can and has all the time from 2005 to 2021 traded in all of those ranges, right up to 45 plus during COVID. So if we categorize trades based on the VIX into 4 groups with an equal number of occurrences, the VIX levels would be divided as follows. Less than 13, right? Doesn't happen very often. Between 13 and 16, that is a low vol environment. 16 to 22 is the normal, the mean. And then greater than 22 is when you start to get a little bit nervous. Frank Caberna gets excited when vol goes higher. And from this study, I can see why. Because they can make more money, or they can have a higher degree of safety in selling their strangles. Now, there we go. For the underlying SPDR, 16 delta put strikes are consistently further from at the money. So, Ange, if you want to run us through this table, through this this trend that holds at every volatility level, how far away can you set your calls and puts for 16 deltas in each VIX range?
So the VIX between 15 and 20, you can have your position, the call strike distance at 4.5%, your put strike distance at 6.6%. 20 to 25, 5.9% and 8.4% respectively, and so forth. But what is interesting, I'm looking at this now, is that 40 to 45 in the VIX range, 11.5% call strike distance, and the put strike distance of 14.5%. So that's pretty close. And then you see a widening at the 45 plus VIX range.
That's right. Now, so what is really exciting here? If the VIX is already above 25, above 30, that means the market is probably already dropped between 5 and 10%. At least. It might even be as much as 15%. So the market's down 15%, and then you put this trade on, and you can sell a put a further 10 or 11% lower. So the total sell-off would be more than 20%, and that would put us into a bear market. And during this time of 2005 to 2021, there's only been twice where I remember us dropping more than 20% and going further, right? That's obviously 2008 and 2020. Normally, you get that bounce from about down 15% to down 20%. You get a bounce in the market. And in every instance, it's always been an incredible buying opportunity anyway.
But what's also interesting is it works in the inverse, isn't it? Because I'm just looking at, I don't know, I could be wrong, but just looking at the last time the VIX spiked to the 35 level, and that was around the 5th of August 2024, around there. And if you go back to Rich's chart, does it give us an idea of how much it might fall back by? Just by using the skewed strike scale? Does it have the ability to tell us how much it might fall back by?
No, so this is just how, if you're selling a strangle, a 16 delta strangle, how far away from the money you can set them. So when it does get to 35, you'd sell a call 8% away, and you'd sell a put 11.5% lower.
Right.
Right? That's what during those different VIX ranges, how far away from the money can you sell puts and calls?
Cool. So at the moment, the VIX is around 20, let's call it, the 20 handle. So I'd be looking at the 2025, the second bar down, right? In order to handily put my, where I place my put and my call.
That's right. So 60, yeah, you'd look on your Tasty platform where your 16 delta is. And that's where you would find it. So what about, in terms of percentage change, the strike distance actually increase more for calls compared to puts as implied vol increases, right? So what's the actual change in the call strike distance? And that is, of course, because the higher the VIX, right? That means that the market is most probably sold off already. As the market sells off, because we know during history it has always bounced. 2008, I think, you know, we bounced very aggressive. Well, we bounced very aggressively in 09 and 10. In 2020, it was a matter of months before we bounced back aggressively. So therefore, that the call strike distance, you are rewarded and you can go higher because, of course, there's that chance of bouncing.
Yeah. Thank God for my pension. If it doesn't bounce back, then we're in trouble.
Yeah,
right.
That's right. Now, since put strike distances are further out to begin with, they tend to increase less than the call strike distances at higher IV levels. Therefore, spider options traders favor protection to the downside more than to the upside. Excuse me.
Upside risk still well accounted for. And this is great because this is just another way of us having signals as to where to place our distance, right? When we put on a call or a put. And I like the fact that Baby Sharks put the VIX range helpfully on the left-hand side because for myself, I quite like having that sort of guide that I can, you know, just print out and stick up on my wall.
That's right. That's well, this one is your cheat sheet right here. If we go back, that's the cheat sheet there, right? That's the important one. If anybody at home is going to screenshot anything, that's the one you want to do because that's your indication of where you can sell your calls and puts. These two boxes here are just the percentage change to show you what happens. Right, so in terms of performance, higher uncertainty, higher volatility in implied vol markets, particularly when the VIX is between 16 and 22, i.e. the mean range, results in slightly lower win rates. However, all win rates are great for premium sellers. All win rates are great for everybody. Clearly, wider strikes in higher IV environments lead to much better performance in terms of return on capital. Look at those win rates, 80 in the 80s, wow. And then the credit as the percentage of the price. You're looking in a high vol environment, you get 177%.
Wow.
As a percentage of the price there. So what's our takeaways, and run through our takeaways for the day.
This is really useful. I'm just thinking about multiple ways to use this already. Due to skew, SPY's put strikes are further away from at the money than its call strikes. This trend on average holds across all implied volatility levels. Now, trader friends, remember that chart that Rich put up with the 16 delta? That's the one to snapshot and keep. However, when comparing higher volatility levels to lower ones, call strike distances showed a much larger percent increase than put strike distances. Therefore, although SPY traders favor protection from downside risk, call strikes still adjust rapidly when volatility increases. Right.
Right, so that's today's market measure. But I would love to run through exactly how this scenario might play out, right? So let's look at this slide again. If we had vol of 30, remembering that we have been there on the August the 5th, we can sell a put 11.5% away from the market, so and 8% for a call. If we actually put that into play on the 5th of August there, where would we have been selling puts on the spiders? So let's go back to that August the 5th. Where was it? It was 50. We got down to, oh dear me, 5,200. Well, on the actual move down, 5,100. So if you're another 11% from 5,100, that must be 550 points. So you can sell a 4,550 put. Okay, and 8% higher means that's 400 points, so 5,500. So you might have been caught on the upside, actually. So as the market goes down, I think I would favor just selling the 16 delta put as vol goes up to 30, because you don't want to get caught on that bounce back up. Because if we take, you know, the market within, was that within 45 days? That was within 14 days, it was already 8% higher. So I think when vol jumps up to around 30, you know, in history, people have always bought the dip. Perhaps you don't want to buy the dip. Sorry, if you do think they're going to buy the dip, you don't want to be selling that 16 delta call. Maybe you want to sell more of the puts.
Now, I don't know much about having multiple legs. You're the expert. Could you not just look at the position and then just move the parameters on the upside as you go along? Could you move one of the legs is what I'm asking.
Well, the thing you would benefit from is as the market bottomed and started to go higher, your vol would drop.
Right.
So therefore, the value of that call would drop, allowing you. So it's almost like the free money from earlier.
Oh God, the free
Right.
money. Yeah.
If you short calls at a vol of 30, and the market starts to go higher, vol is going to drop, and therefore the value of that call is also going to fall. So the thing that you are short of is dropping, but the delta of the market you're losing out on.
Right.
So I'd much rather be short a call in a market going higher than I would being short a put in a market going lower, because you get hit double whammy then. And that's the difference in these market rallies, is that at least you've got vol dropping if you're short calls.
Yeah. So keep an eye on volatility, so you're not caught out, and also keep an eye on that chart on the volatility in your 16 delta, so you can better position to cover for whatever the situation.
Great. Let's go to a break, and then we will be back with what's next, apart from it being Halloween.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our training platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into three key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Hey, welcome back to the best part of the show, which is what's next, not market measures, we covered that already. What's next, where we tell you how to trade pre and after the market close.
So we've just seen that advert for Tom Sosnoff's UK tour. The people out there have heard that Rich is joining him on stage and is going to get beaten up, is going to get the mick taken out of him. So it sounds like we're down to the last 10 tickets in Edinburgh, and there's only 16 tickets left in Manchester. So go to Eventbrite or tastylive.com events, sign up now. The tickets are free. That is now in 2 weeks' time. So starting the week, the 11th of November, then you've got your big UK tour there. Tom Sosnoff coming. Sign up now.
Remember, sign up, sign up, sign up. Don't go to the show and do that thing. Do not be that person waiting in line, trying to get a ticket, trying to log in there, saying you know Rich. It's not going to work.
Right, Ange, what we got coming up pre-market?
So pre-market, we've got very little time, so I'm going to just go through it. Uber, before the open. We also have Peloton, which I'm going to short. Uber, one that I'm looking at potentially to long. If they say anything positive about how they're tying up with Teslas, they're going to use those automated cars as part of their fleet. We're going to get hopefully more details on that. We also have Merck, ConocoPhillips, and Estee Lauder before the open.
And then there we go. Altria, Bristol Myers, Cigna, Comcast, Parker Hannifin, Peabody, and Roblox, and Wendy's as well. Incredible. Aftermarket, we've of course got Amazon that we mentioned earlier, Apple, and Intel as well.
Those are the biggies.
Big numbers tonight. How is the market going to hold up? Well, that will be dictated by the numbers we've got at 1:30 p.m. So macro, important data there. The Fed's choice of inflation measure, PCE price index for the month of September. Expectations are for a 0.2% increase month on month, 2.1% on year. We're getting down to their target. Is there a chance today that we could meet the PCE target on inflation for the Federal Reserve in the first time in years?
And of course, the big one that we are looking out for, and I will be trading that, especially with oil and gold as well, the non-farm payrolls. That is the big one out on Friday. 115,000 is what we're, the market rather is expecting from a prior 254,000. But as you heard,
there we go, guys. So show the expectations there, because we've also got unemployment rate 4.1. Average hourly earnings, Ange. What are we looking for there?
Average hourly earnings on the month-on-month figure, 0.4%. I don't know about you, Rich, but Martin and I were talking about this earlier. He says it's hard for him to call. My gut feeling telling me that unemployment rate will stay the same. But we're going to see a weakening of that non-farm payrolls number.
That's right. But unfortunately, people will just say, oh, it's all distorted due to the storms. So we might see a weak number there, but the market may ignore it. What they might not ignore is the ISM manufacturing that we've got at 3 p.m. tomorrow.
That's right.
So that ISM manufacturing number important as well. So 3 minutes left. What do we want to look at? I think we want to get an update on how those FTSE trades are doing, because the FTSE is right on that 8100 level. What has been moving?
You placed a trade on the FTSE earlier on in the show, didn't you?
That's right, yes. So I've got a November 15th expiry. What would we call it? We call it a bit of a risk reversal, I guess. Selling put to buy a call. Now, Smith & Nephew, no improvement there. So Smith and his niece down 12.6%. BNP Paribas also bottom of the leaderboard in Europe, down 5.6. Anheuser-Busch not having a great day there, down 4.6.
Also looking at the all sessions MicroStrategy, top of the leaderboard for all sessions, up 3.8%. Plug Power up almost 2%, and Beyond Meat, believe it or not, it's number 3. Really? All sessions. Beyond Meat, one that has done a U-turn in strategy recently, saying that it is going to look at potentially introducing a bit of meat into its Beyond Meat products, because surprise, surprise, people, they saw a initial uptake and then it just plateaued.
What's that Beyond Meat are talking about putting meat in their products?
Yes. Wait.
Okay, it's not April Fools.
In fact,
Come
I'm
on,
telling you,
it's Halloween.
In fact, all of them are looking, don't believe me, go and check it out. All of them are looking to add some sort of slight meat product and sort of have a range where they can't get everyone to be fully rid of meat.
And vegans are throwing their vegetables at the screen as we speak.
I know. I can't say this anymore. Damn the world of emojis. I can't say I love an aubergine because that means something else. I've been told, do not say I love aubergine. I mean, like, why? I love the thing, the fruit. But they found that their sales plateaued. No matter how hard they tried, they couldn't get it to rise any further. But anyway, looking at
aubergine.
The aubergine. I'm looking to trade the NASDAQ. I think that coming into perhaps the open, we could see further weakness there, especially when we've got all those big tech names coming up.
What we are seeing moving on the upside, if we want to take a look in the all sessions, my right-hand column is a bit more of the spicy stuff. That includes MicroStrategy, now up 4% on the day on the all sessions. MicroStrategy looking to raise another $42 billion of cash to buy Bitcoin with over the next few years. That one, the market likes it. If you're holding MicroStrategy, you're a believer in Bitcoin, I assume, up 4% there pre-market. Airbnb up 1%. That's on the back of good numbers from booking.com. So Airbnb, the leader, along with Uber, ahead of their numbers. Right, now, how was that FTSE? We mentioned it, didn't we? FTSE was straddling that 8,100 level, 8,100 on the FTSE. Oh dear, the graph has, oh, that doesn't look great, does it? Oh my goodness, that is a bit of a horror show after the budget. So, what are you doing the rest of the day, Ange?
I don't know. What do you think is happening the rest of the day?
I think, is it Easter? Are you the Easter bunny?
No, I'm meant to be a slug.
Have you got that on right?
Here we are. I'm meant to be a slug, and you are meant to be.
That is
you are meant
brilliant.
to be Dracula, sucking the lifeblood out of me and and the markets.
It is the...
But you guys have a great Halloween. It's been wonderful trading with you this early in the morning. Oh my goodness me. That's quite freaky. But have a great Halloween and see you tomorrow.
Have a great day.
Another set of positive tech earnings fails to excite stock markets. We, of course, had Tesla fail to excite them last week. Now, Alphabet, Google's parent company, struggling to do the same. And overnight results from Microsoft and Meta, which on the surface look fairly strong, at least not meaningfully worse than expected by any stretch, they're failing to excite markets again also. See how that dust settles. But in macro land, things are on the move. And that's what we're going to focus on here. This is, appropriately enough, Macro Money. I'm Ilya Spivak, head of global macro here at tastylive. And what we're going to do here is take a look at what's occurring beyond stock markets, which are looking listless here, and consider instead what is going on in the economic data universe here, because where we've ended up is smack in the middle of a huge rethink on all kinds of expectations for monetary policy, or at least the opportunities for those rethinks to continue, because we have a flood of macro data that has kicked off this week. We still have a lot of the meat ahead of us, but the beginning of what we have been waiting for this week with all of this event risk, that has already started, and the results are frustratingly inconclusive as we get into what will be the next round of economic data coming up in front of us. So what we are going to do here is first take a look at how markets have fared so far as we get to this avalanche of economic data, and then see what comes next and what it may do from here as we see all of this register across the various assets. So let's begin here with just a look at the way the markets performed today, which is kind of a strange hodgepodge of outcomes. So again, we can see soggy results from stock markets. In fact, the NASDAQ actually leading the broader S&P on the downside, because despite these upbeat earnings reports that we've seen, it is the tech side of things that's kind of soggy. Now, the accounting scandal that we see here appear in the semiconductor space probably isn't helping, but one would think that you would have an offset from positive earnings, because that seems more idiosyncratic of a risk. But no, stocks struggling to make hay, yields up on the day ultimately, which is a wild reversal. Earlier on the day, bonds were up significantly and yields were on the defensive, especially toward the longer end of the curve. But now yields end up finishing the day with gains. And that is an interesting narrative here, because gold, despite higher yields, again manages to climb. It's been bucking higher yields for the better part of 2 weeks here. Very uncharacteristic for gold. The US dollar, something of a mixed bag, but mostly lower, a touch off the 6-week high it reached yesterday. So overall still quite strong, but a touch lower today, with most of the gains happening for the euro. All of that seemingly coming together to tell a mixed, unclear, disunited, as it were, narrative. Now, where yields got a little bit of a seesaw is from conflicting cues in U.S. economic data that left little to say of substance about the move in Fed policy expectations. So first, we had the private sector estimate of U.S. jobs growth from ADP. That showed us a rise in payrolls of 233,000 in October, which was the biggest since July 2023. Strong upside surprise there. On the flip side, U.S. GDP numbers for the third quarter, one of the big tentpole releases we've been waiting for this week, they ended up looking a little bit soggier. Those numbers giving us annualized growth of 2.8%, a little bit lighter than the 3% expected, and as we saw in the second quarter. By no means catastrophic and mostly anticipated. The Atlanta Fed GDP Now growth tracker had that 2.8 number a day early in their model. But nevertheless, something of a conflicted picture. So bonds initially rally, then sell off, and we even end up with a little bit of a rise in yields. Crude oil marching to the beat of its own drum. It was down yesterday. It's up a bit today. It's little changed on the week between those moves. And probably the more interesting bit where we can actually make some key connections is the euro. It certainly outperformed, and that was after mostly better than expected GDP growth data. Taking a look at the quarterly numbers here, France better than expected, both quarter on quarter and year on year. Germany, likewise, and although things actually are shrinking in Germany year on year, it's by a smaller margin than expected, and on the quarterly we saw an unexpected rise. Italy looking a little bit soggier, and when you dump it all together and average it out, you end up with Eurozone GDP that in quarter-on-quarter terms increased by twice as much as was expected. And that, of course, not surprisingly, gave a little bit of a lift to the euro as we saw that rate cut expectations diluted a bit. Here's what we're looking at there. We can see a bit of an upshift here. The markets seemingly clawing back expectations for how many rate cuts we're going to get both this year and next. So this sum actually edged into a more hawkish direction. We're, of course, still primed for cuts, but the likelihood that we are going to get one more cut this year, at this point, still high, but not certain, about 86%. And then for next year, we're looking at about an 84% chance that we get 4 cuts, or if we look at it in a cumulative way, we're looking at 3 cuts already fully baked in, and the probability of a 4th one next year at about 20-ish, 25%. So we're looking at an extension of this adjustment after these numbers. Over the course of the next day, this is where things get interesting. Overnight, the German version of inflation data is already out, and we can see it's a little bit hotter than expected, which no doubt helped this story in the euro. 2% versus 1.8% expected on the headline rate. And that, of course, underpins stronger GDP numbers and helps to get you to a less dovish ECB in the outlook. But now we are going to get the other inputs into the story: the French numbers, the Italian numbers, and the region-wide. And for the region, we can see here that the expectation is we are going to come down, or come up rather, to 1.9% from 1.7. That would be a slight increase, not really the biggest adjustment in the world, but a little bit of an uptick, and to the extent that we've seen the euro be reactive to what's there in these numbers, it could certainly be a further upshift. However, if we look at the leading PMI data that precedes this, this is from S&P Global and the Hamburg Commercial Bank, we can see that the region-wide numbers for October actually had the slowest rise in output costs. Those would be the ones faced by consumers since February of 2021. And in Germany overall, the fractional pace of inflation was the slowest since January of 2021. Now, obviously, the German bit here doesn't perfectly line up with what we saw in the overall numbers, so that's one reason to take this bit with a grain of salt, but also sequencing matters. And so when we consider that output prices overall were the slowest since February 2021, it's possible that that doesn't show up in Germany with the same timeline as it would in, let's say, France or Italy or the region overall. So that for the overall numbers, we end up with that significant of a price decline does suggest you could get a bit of a downside surprise, especially if, after the German numbers, the markets are already primed, not only for an uptick in CPI, which is already baseline in the forecast, but maybe an upside surprise to boot. So if you get a number that's in line, in relative terms, that becomes a little bit of a disappointment. And if you get a number that's lower, in relative terms, that's a lot of a disappointment. We look at the way Eurozone economic data has behaved relative to expectations. It's improved a bit recently. This is the Citigroup Economic Surprise Index here. We can see that we're still in negative territory. That is, we're under the zero line. That's telling us that Eurozone economic data still tends to miss relative to forecasts, but it is approaching closer in on those forecasts over recent days. And so with that in mind, maybe we get a number that's broadly in line with expectations, tilting a little bit softer. If that's the case, after the markets expect an upside surprise in the wake of Germany's numbers, that might take the wind out of the euro's sails a bit and suggest the ECB is actually on track to be a little bit less hawkish than what today's numbers are implying. And then, of course, we're going to get inflation numbers across the Atlantic. The Bureau of Economic Analysis is going to publish the PCE, or the personal consumption expenditure version of U.S. inflation data. That's the Fed's favored inflation gauge. And here things get a little dicey. So the headline number is expected to come down to 2.1%. That's the lowest reading, if it comes out as expected, since February of 2021, and almost directly on the Fed's target. But that's not really where the central bank is probably looking. It's probably looking at the core, where things are expected to be a little bit warmer once you strip out the effects mainly of energy, which has been a main disinflationary force, but also the effects of food as well. That's admittedly a paltry influence here. When you look at this then, and you are left with where inflation lives, clearly it's mostly core services, which is where the Fed feels that it can have impact. As we've talked about before, the housing bit isn't really something the Fed has much influence on, because it and its rate hike cycle are a big part of the reason why those readings are still sticky. And once the rate cuts really build out and filter into the economy, you would expect that to unstick, both as sellers feel better about selling because they can refinance less expensive relative to where their outstanding mortgages already are, and because that then brings down the prices as people sell and buyers come back in. So what the Fed cares about is this service sector bit. And here, to the extent that that is approximated in core CPPI, the dotted line here, we have a little bit of an issue. At 2.6%, we basically have stalled on the disinflation front going back to May. The average May through July is in fact 2.6%. If you squint, you can see this is a flat line now. And for the service sector, you can certainly see it clearly. In fact, the only thing that disrupts this is an uptick to 2.7% in August. So it looks like disinflation has hit a wall of some kind. When this happened earlier in the year, the Fed became, after about 3 months of this, reluctant to cut rates. And we saw them become a lot more hawkish in May and June before ultimately they had to pivot away from those kinds of ideas going into September. So what we have here now then is another scenario where the Fed might be hamstrung. And indeed, if we look at higher frequency readings, what we find is even though the monthly PCE numbers have been coming down, this is August, July, June, we can see that since June they've kind of steadily declined. Here is the standstill in the year-on-year numbers. Again, since May, we're not improving. We're not heading lower at this point. But more importantly still, when we look at the high-frequency indicators in the bars up here, the red ones are the 6-month annualized percent change. In the blue bars, the 3-month annualized percent change. And what we see is that for the higher frequency numbers, the 3 months here, in August, we saw the first rise in 3-month annualized inflation since March, which essentially just means that the most immediate data on inflation is telling us that were that to continue at the current rate for a 12-month period, we'd end up with higher inflation as of August than we would have if we did the same extrapolation in July. And it's the first time that we moved in the direction of higher overall inflation since March. So this is not going the Fed's way. And with that in mind, the Fed might well think, well, okay, if this is not going our way here, then perhaps what needs to happen is a bit of a delay on the path for these interest rate cuts. Now, when we consider what the Fed said when it last updated this in September with that fateful 50 basis point rate cut, essentially has them already in a corner to cut at November and December policy meetings. But the markets are now growing a little bit suspect as to whether that's actually likely. And after all, we continue to see, despite the slight GDP misstep, that U.S. economic data continues to surprise relative to expectations on the top side. And so as we consider this overall, we are still apparently in a position where U.S. economic data can more readily beat forecasts than not, even as this starts to get stuck here a bit. All of which perhaps comes down to the Fed getting a signal from this data that says, cool your jets. And in fact, the markets are in line with that kind of thinking, it would seem, because we continue to see this hawkish adjustment in overall policy expectations. Further climbing is the sum here of where rates are going this year, that's in the gray, and where they're going next year in the yellow. The sum here, 113 basis points now left on the menu, which is interesting because, of course, the Fed said, again, in its most recent forecasts, that we are looking at 100 basis points in cuts this year, 100 basis points next year. 50 basis points this year is already there. That would leave 50 basis points more, as we just mentioned, over November and December. At this point, the markets have already sought to price in one of those cuts, which is a meaningful step back from the more dovish setting even just a few weeks ago. The likelihood of that second cut now, just 24%. The likelihood of getting to all four cuts next year, likewise diminished here. 3 cuts all the way baked in at this point, and the probability of a fourth at about 26, 27% or so. So things are already getting a little bit defensive here. Not surprising in that context. Of course, bonds have fallen, yields have risen, and the dollar is stronger as we get this readjustment. Stocks for now are just stuck and thinking of what to make of this. That may be perhaps a dissipation of the election or some such other thing, but as we mentioned at the top of the show, that does not preclude the emergence of trading opportunities elsewhere. And so the focus then goes directly to the euro. If we are going to get somewhat of a disappointment bias on the Eurozone inflation side of this as we move forward, meanwhile, the US side might give a little bit more impetus to the reflation narrative, well, then perhaps this resistance at 109, 109.10 on the euro after this bounce, these are 6E euro futures, maybe that holds right here. And if it does, and if we ultimately run aground at this resistance and show signs of stalling, perhaps we then have a new entry point into what has been a precipitous decline. Maybe there's a new selling opportunity against the 109 figure that emerges here with an initial aim back to 108, and then beyond that 107 and 106.29, 106.30. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may head therefrom. I am typically on with Victor Jones for the Price of Truth on Wednesday, though we're off this week. Back with Chris for Futures Power Hour on Fridays and Mondays. On with Victor and Tom for First Call at the Global Market Open on Sundays. Writing for the News and Insights portion of tastylive.com and commenting sporadically on the platform formerly known as Twitter at Ilya Spivak. If you're watching this on YouTube, like and subscribe, and Macro Money will be back tomorrow. Happy trading.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend, and you know what that means. Time for the last call. Last call on the evening S&Ps. Going to see them down $13 presently, Sadov. $13.75 with 1.5 million cars trading. Decent sized volume for the day. NASDAQ down 134. Reversal of fortune for both of those before the show. We came off at 10 a.m. They were both higher. Russell up $1.60. Russell higher by a skosh, which was lower earlier in the day when the evening S&Ps and the NASDAQ were higher. Dow down 43. I'm basically going to call it an unchanged day. Maybe a little bit of weakness in the NASDAQ, down 140. Volatility up 48 cents. No weakness there. 1920 side enough volatility upticking a little bit. Bonds back under 118. They are up 6 ticks to 117.26. They have had an okay run the last 2 days, but they've really given it up. They were flirting with 119 sound enough. They're under 118.
Yeah, they're up.
Bitcoin,
they're up 105 this morning, and the notes have had a 20-point reversal today. It's a lot.
Yeah, that's significant. What do you read anything into that? Both of them getting weaker.
No,
really off of lows.
No, but I think I do read something into this market, but no, not on the bonds and notes. Weird action today, considering how oversold the bonds are. The fact that they couldn't even hold that rally today, that's not a good sign. And I only
not a good sign for the bulls.
Yeah, I'm a bull. Not a good sign. And
not everybody knows what you are. I mean, people know what you are after listening to Truth or Skepticism with you today. I mean, they know you're a little bit misguided, but other than that, they don't know your positions.
Hey, if you missed Truth or Skepticism today, love the conversation. Dylan and I talked about media and endorsements, and mostly talking about Bezos and the non-endorsement of the Washington Post. But fun discussion. If you want to go back and listen to it, pretty fast, 40 minutes. Go check it out. It was a fun one.
Breaking news: you admitted Trump wasn't a crazy, scary guy. You admitted that. You said that.
No, I said he was less scary than a psychopath that like Dylan thought he was.
Okay, gotcha.
I think he's too.
Maybe I took it out of context.
Yeah, you took it out of context. I think he's too.
Like a lot of the media does with all of their.
I think he's too small a man and too stupid and incompetent to be danger. Let's put it that way.
And there we have it. Okay, gold up $15.90.
I just want to go on record as saying Tasty is not scared to say what they want. That's all.
$2,800 an ounce, Sosnoff, gold.
Gold. Yeah, you know what? Gold was, all things considered today, gold and silver, a very strange little divergence today. Silver was down like, I think, almost 50 cents, and gold was
47 cents, 1.5% move, and gold up 0.5%.
It's very rare. It's very rare that you have to adjust your gold positions by rolling up puts and your silver positions by rolling down calls. But that's what I had to do twice today. So a very rare adjustment day in gold and silver for sure. And bonds were up a little bit, not much, just 7 ticks, but notes are down 4 ticks, and if you double the notes, that's really 8. That's like a 15 tick, differential today. That's a big divergence as well. So there was some weird markets. That's all.
Agreed, and across the board too, right? I mean, even from a little bit of the earnings, you had a couple up, couple down. It wasn't really one-sided, and then you also have like AMD down $16 today, SMCI down.
Yeah, AMD weak all day. I mean, it opened down 13 or 14. I thought it would bounce at least a couple times because I needed to sell some calls, and it really never did the whole day. I mean, it basically is down, wrapped around that 150 level the whole day. Watched it all day.
Yeah, and SMCI, I was reminded from an emailer, put into the S&P 500 on its highs, if you remember, now down $15, 30 some odd percent down to 33 and change. Crazy move in SMCI.
Yeah, and I didn't trade in there because the markets in there stink, and it's a really hard stock to trade. I mean, I cannot believe how bad the markets are and how bad it is as a trading vehicle. But
sure,
it's also one of those stocks where, like, when you get news, like the reason it's down today, that always kind of scares me. Like, is the whole thing a scam? You know, like, I don't know.
That the accountants are leaving the ship. Yeah, I would say that's not a good sign typically. No.
Well, when the rats are jumping off the ship, yeah, it's not a good sign.
That's what I said. Accountant jumping off the ship.
Yeah.
Yes. Speaking of jumping off the ship, coin down 7 as Bitcoin makes recent highs. Another divergence.
Well, the futures are down 700 today, but Coinbase is selling off the last 2 days. Yesterday was only up 2 with Bitcoin up 3,000, and today.
Okay, that's my point. Bitcoin making new highs, recent highs, and coin selling off. Another divergence.
I agree, and I'll tell you what's even worse, and this is my worst trade of the day, or I shouldn't say my worst trade because I didn't do anything in there today. My worst position is IBM. When IBM had earnings. And when IBM had earnings, and I didn't trade IBM today, but I just have an existing position there. When they had earnings, the stock was trading, a little over 230, 232, 233, something like that. Yeah. They had earnings, and the stock dropped to 219, 220. Mm-hmm. It traded down to 216, back up to low 220s. And, and I thought, okay, this stock gets under 215 or something. Those 200 puts are looking kind of juicy. And I got to tell you, because they had some big premium, I never thought when the stock was 212, it was getting down anywhere close to 200. It's 204 right now, down almost $6 today. IBM's gotten, if you put up a chart of IBM,
I just had it. $6 is like a 2-week move to one side.
It's a little bit of a bloodbath in IBM since earnings. They've lost.
It only had the 24% monthly implied volatility.
I know, and they've lost about 15% of their market cap in the last, week or so. That was probably, let me just see real quickly. That is my biggest loser today, which actually isn't it's not that bad. Biggest winner is bonds.
You got Apple down $3. I mean, there's a lot of stocks lower in the market for the NASDAQ only being down.
Apple's my biggest equity short. So I have no complaints about Apple. The stock that got whacked today is a stock that's been rallying a lot lately, which is, we've been trading a little bit, DJT, the Trump media stock.
Down almost $10, right?
I think it's down
$11
11.
down. Mm-hmm. Yep.
Last time I looked, it was down over 11. We have a small position there where we didn't make or lose any money today. We just did that butterfly during what's your assumption today. Mm-hmm. So we're close to that middle strike. Didn't think we were going to get there. But
definitely didn't think you were going to get there in a day.
Yeah, no, I didn't think so. I thought the stock was 50 at the time. We did the 40 butter with the 40 strike in the middle. But those trades don't make any money when that happens. That's for sure. But anyway,
because it moves too fast for a butterfly, like slow movement to the body.
I think that stock. I don't think this is just for all the people the poll watchers. I do not think this move in there has anything to do with the election whatsoever. I think the stock got way ahead of itself, and I think there was too much hype, and they squeezed the shorts. I felt that there was a liquidation like 2 days ago in there. I thought on Monday somebody kind of panicked, and Tuesday the same thing, and they kind of blew them out. And you can put the meme stock to bed. It's a $40 stock, and let's see what happens from here.
Understood. On the the green front, you got Reddit up $34. Enough.
I
It's
know.
only $116 now, and it's up $34. Big move in Reddit.
Sold out my whole Reddit position, average price of about 60, and it was like less than a couple of weeks ago. The stock has actually doubled. It's unbelievable.
It is crazy. You got Google up $6. You got Microsoft, which has earnings. We'll get to those in a minute, up $2.50. You got Roku, which has earnings, up $1. I think it has earnings. Yeah, up $1.70.
All right, let's talk earning stocks because I got a bunch of stuff on. So let's see what we got.
We're gonna go in my order. You ready? Microsoft.
All right, hold on one second. Microsoft. Yeah, we have the 370, 490 strangle on.
In Dees?
370, 490 in December. Has a small short delta, and they pumped a bunch of premium in today. So what I'm going to do is I'm going to add a tiny little bit to my position. 370 puts. Now, if I remember correctly, in Microsoft, didn't they goose it up last time, like big, in a big way?
You're good, sad enough. You're good. They most certainly did.
12 delta on the calls, 8 delta on the puts. I could actually move the puts up a strike here, but let's just do this.
Or the calls down one. Get you shorter. Just kidding.
All right. Oh, that was too easy. I sold it in the hole. Just added a little bit at 430 something to my strangle.
432.
Yeah, the question is, do you roll up the putties here? Get a little more delta neutral. All right, let's see. What else you got?
Meta.
Yeah, that's the stock I love to hate.
That's the stock that worries me.
Yeah, I know. Meta, we have the... so this stock opened up, let's call it $10 pre-market. It's been unchanged the entire day. I'm short the DEES 600-605 call spread. You say you got to get directional.
I do. I think you have to be directional with earnings these days, especially in December. You're not getting paid for premium contraction in December.
Yeah, I'm short the 600-605 call spread. The expected
basically a 50-50 shot, maybe a little bit better your way.
Yeah, there's no...
It's a directional bias with defined risk.
Yeah, it's trading for 220, 225.
230, let's just call it 230, whatever. $40 plus expected move, Sadnov.
Yep. I'm just going to round down because I want to get an even number. Okay. So I just added to my position a little bit, but that's...
You're going to round down so you can get an even number by selling more. That's really interesting. Can you tell me about that math?
Yeah,
Can you tell me how you rounded down by selling more of the spread?
It's calculus, dude. You wouldn't get it. It's calculus. Too hard for you.
Calculus. Yeah, I got it. Okay.
Yeah.
Okay. You got filled at 235, by the way.
What?
You got filled at $2.35, by the way.
225.
Sorry, 225. I do apologize. You got filled at 232 originally, and I just assumed it was higher because you're not that good.
Yeah.
Sorry,
no,
Meta.
It's fine.
I apologize.
All right. So that's Microsoft. That's Meta. What else you got?
Coin.
Coin has earnings tonight?
Did I say it? Do I stutter?
Coin. Oh, you know what? Somebody got me into that 2-day this morning for earnings.
Hopefully it was short. Hopefully it was short.
No.
Oh, you're in trouble now.
Yeah, we're in trouble now.
Let me check my one other Taiwanese source here to make sure on coin. Yeah, I got it. 30th, it looks like, yeah.
What's the expected move for 1 day?
1 day expected move in coins about $15, let's call it.
$15.
Mm-hmm.
That does not seem like a lot on a 200-hour stock, does it?
No, I mean, 20 would be 10%. Doesn't seem bad. Seems about average for these days. It's got an IV rank of 74.
I'm gonna move my strikes just a little bit. So I'm gonna widen them. So I'm gonna go into the. So I'm gonna go do for earnings the D's 320-150. Okay, so for everybody watching at home, that's just a short strangle. D's 150 puts, 320 calls. That's basically, let's call it 2.5, 3 times the expected move.
Your beloved hood.
I don't have a position in there. They're not my beloved anymore because they stole my cherry, and that pisses me off.
That
and
was that was egregious.
That was like the lamest thing I've ever seen on a advertising. They took the cherry, and then the second thing they did was they really copied our interface. And I hate firms that have no like creative
vision.
Creative vision, or it's just like your main game plan is just copy somebody else's front end. That's kind of lame. So yeah, no, I give them no credit. I'm not trading them.
Good job out of you. Carvana, CVNA.
You know what? Now Carvana is interesting because we have not traded Carvana in a long time. What do you want to do?
If you haven't looked at it, Sadnoff, it probably doubled or tripled from the last time you looked at it.
What do you want to do, as they say?
What do you want to do? Carvana has a $25 expected move, Sadnoff. $25. Make you holler. I have to assume that there is call skew. I would assume properly.
You know what's amazing in Carvana is that you literally could have had whatever you wanted in that stock at some
in the 30 handle.
What?
In the $30 handle.
You could have had whatever you want in that stock at $5, $6. I mean, it's crazy. Have you seen the only other stock I can think that I've seen that moved like that? What was the travel stock?
Zillow?
No, we don't trade anymore. Not Expedia. What's the other one?
Not Expedia, travel stock.
Can't think of it. Anyway, it'll come to me.
Oh, with William Shatner.
Yeah.
Yeah, I forget what it's called too.
We're getting sad.
We're getting old, dude.
Sad.
Priceline. My Taiwanese sources told me
right.
Priceline.
You're right. Priceline. So a buddy of mine was at one point was the CFO of Priceline, and basically they forced the entire management team.
You running some you a fancy hoe.
No, this is when they were a startup, and they got the price down. The company was doing really bad, and the price got down to basically, I want to say under $2.
Okay, yeah,
under $2. Yeah, it's the first time I've ever seen a stock go from like under $2 to, and everybody, all the original guys puked it out under $5, and then I've never seen a stock go from under $2 back to whatever, a couple thousand. Crazy numbers.
Well, what are you doing in Carvana? I got more for you. Let's go.
CVNA.
Yeah. Only got an IV rank of 30.
And I do not have a position in there. Now, mind you, I haven't made any money on a single earnings trade in what feels like this entire cycle. So I'm not exactly doing too good. What's the expected move overnight in Carvana? $25.
$25. A little bit less. I say you go into Nova options.
The 1 day or the 16-day?
16 days, but markets are too wide in here. They're 40 cents wide.
I agree with you.
Yeah. Roku.
I don't think you can trade Carvana.
Roku. We're already on to Roku. Get with the class. Let's go. Catch up.
Roku. We have a small position on in there. Oh, we did the trade today. We did a double ratio spread. We did it for 39-cent credit. It's now 58 cents. So let's do this. Let's go to Roku, filled orders. Let's go to similar order. And let's reduce quantity so I can put this thing on. And we did this morning for 39 cents. It's, I can do it for about 20 cents better right now.
My Taiwanese sources, who you know make some of the best chicken fingers, Sosnoff, said to me, for what it's worth, I just sold a car through Carvana. Easy, painless process and reasonably priced. I'll be selling another 1 or 2 through them.
I believe him. I've never heard a bad thing about Carvana, but I've never used them.
I have to admit, the last time I drove by their gumball machine of cars, it was filled.
Anyway, I can't get filled in Roku at any price. So much for that.
Okay, how about Etsy?
No Etsy.
How
Not
about
tradable.
Starbucks?
Where is Etsy trading anyway right now?
ETSY. Let's see. You don't need no alibi.
I just walked Carvana down. So if we did a 38 the first time, 49 the second time, not that much better.
Great. Where do you think Etsy's trading?
I'm going to say $60.
48, Sadnov, hasn't had an uptick in God knows how long. Goes back to the days when you say, does anybody even use this thing?
Does anybody use this thing is right.
And then it rip roared in our face, remember?
Starbucks. I do have a position.
Starbucks.
I do have a position in here. I have a slightly long position, short the 90 puts, the 110 calls in Dece.
You gonna stick with that? I'm running out of time, so I want to give you your favorite.
Hold on. I'm just going to take a quick look. Do you stay with that? What do you think about Starbucks here?
I think they're shaking in the boots. They saw that picture that we showed today of that great grilled cheese sandwich that you got going, and they are shaking in the boots. That stock down 5 cents.
I'm going to keep some long delta in there. Go ahead. What else you got?
Your favorite, Uber, UBER.
I do love Uber. I think you got to be long Uber, no matter what. I'm going to go on record as saying, I've said this many times. one of the greatest, most ingenious companies in our lifetime, in the top 5 of all time.
Yeah, they stole the Bats model when he was working for LJT Car Service there in Brooklyn, New York. That's right. I was the original Uber.
One of the greatest models of all time. Love it. One of the biggest disruptors I've ever seen. Uber. Got to give it some.
Are you doing anything? Selling some puts?
Yeah. 67 and a half puts, 100 calls. No, you don't even need to sell the calls. 67 and a half puts. This is one of these trades where you got to get just, wow, these puts trade, they're trading a little rich. Sold them at a buck. Surprised by that on a 98 limit. All right, what else you got?
Try your luck, man. That's those high frequency traders ripping you off.
Yeah.
MasterCard, Roblox, BMY, MGM, Dash.
No.
I think I got them all.
No, thank you.
Care about COP?
No.
I didn't think so. That's all we got.
Delta's tonight a little bit short. Theta higher than it was yesterday, that's for sure. Extrinsic numbers.
Volatility expanding today too, right? Look at even the S&P just sold off about 10 handles also, down 23, trading near their lows.
Yeah, they even have the Russell. Even have the Russell
even
down.
have the Russell lower. I mean, the Russell's usually always lower, but yes, it was higher today.
It was.
Even have the Russell lower, like it's never happened before in the history of trading.
It was up 20 some odd points earlier, so it's a pretty good sell-off. I don't think you want to go home long tonight, Mr. Batista. I'm just warning you because I know you have a propensity to be.
It's all gonna be on Microsoft's shoulders, Sadnoff. That's the play. As goes Microsoft, so will tomorrow.
Well, Meta will have a big say in it too. I can
Meta
see
too. I will give you that, but not as much as Microsoft. But yes,
I can see Meta and Microsoft both get in the hammer.
Wow. you sound like an optimistic man.
I can see them both getting the hammer. I think they're both rich. They both had huge up moves last cycle. I can see them both getting a little bit of the hammer here. I'm looking to see if there's anything we need to do going here into the close. I think you can lean a little bit short here.
I mean, volatility's kind of confirming that a little bit today, up almost 60 some odd cents. So yeah, I'll give you that. Volatility's up.
Yeah,
I'm pretty flat here.
I'm going to roll down a bunch of calls here just quickly on the close. We got 30 seconds left.
Apple down almost $4. Definitely looks like the stocks that are lower have been commanding the market.
Yeah. Anyway, I rolled down some stuff on the close just to give myself a little bit of a cush. And that's it.
And that's it.
And that's it. All right. Fingers crossed. SPOO's down 20. I guess we'll have a fun couple of minutes here.
Yes, we will.
I got a few short deltas off. I got a few short deltas off into the close. But
Microsoft comes out after the close, and Meta both come out after the close. So does Coin, Hood, Carvana, Roku, Starbucks. Only Uber for tomorrow, sounds enough that you did.
NASDAQ down 168. Just keep an eye on NASDAQ right here, because in the next 2-3 minutes, you're going to see a minimum of 50 handle move in the NASDAQ.
Oh, Nostradamus.
Yeah. Let's.
Microsoft must have come out, Sadnov. It traded up to 436 for a minute, down to 420-ish. It's 427 right now, down around $5.
NASDAQ just dropped 50 handles, like we said, and now it just rallied.
It just rallied 50 handles. Yeah.
So something else must have just come out. That must be Meta.
Well, Microsoft is unchanged or down 3. Meta is unchanged. Hasn't come out yet.
Okay. So I got Microsoft on my big screen here, and it looks, is it unchanged?
Yeah, it looks like it's up 2 at the moment.
It's not the big move we were hoping for.
No, not the directional bias that was going to lead us to the promised land.
Now it's up $6.
Yes, it is 430. Well, yeah, 435 or so. Yeah, $3, whatever.
Bummer.
It's moving around.
Yeah, it's moving around. All right, well, I'll let you enjoy your Meta.
Thank you, Sadnov. You're a wonderful overlord, Sadnov. Man, there's nobody nicer than you. Thank you so much for being so kind. I will see all of you tomorrow, and I'll try not to look at Tom. Peace.
It's a day where narratives come under pressure. It is Wednesday, October 30th, 2024. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, and Dylan Radigan in San Francisco, no, in Milan, to take you through the rest of this hour as we get ready for the futures market close. We're also contending with the Microsoft earnings here, which just came out, and share prices are moving up. Meta earnings just came out.